Mic check. Okay, good morning and welcome back to docket number 241004. Are there administrative matters before we begin? Attorney.
Good morning, Chairman Gillette. Just a note that Ms. Van Luling for the company has located several of the read-ins, and I'll defer to you on whether you'd like her to read those in now or hold it until the beginning of the capital panel when the company will be back at the witness stand.
We can do the beginning of the next panel. Thank you so much.
Thank you.
Okay. Uh, Attorney White.
Down my eye. The OCC's witness for the rates panel, Caroline Palmer, we had some discussion with authority staff and with CIEC regarding her cross, and she will be available on Tuesday. It looks like the timing of that is going to be about perfect, but we just wanted to let you know.
So no sooner than Tuesday.
Right, by Tuesday morning, she'll be here.
3, 4, 5, 5, 6. Okay.
Yes, ma'am, the 6th. She's on page 16 of the.
Thank you so much. Okay. If there's nothing further, see, Attorney Wheel, if you want to introduce your witness panel, and I will swear them in.
Sure, this is John DeFever of Larkin and Associates, who sponsored testimony from OCC pertaining generally to revenue requirements in this case, as well as Richard Sobolewski, OCC's supervisor of utility financial analysis, who sponsored RRU 407.
Thank you. Gentlemen, if you could please raise your right hand, I'll administer the oath. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury.
I do.
Thank you. Attorney Wheel.
Mr. DeFever, did you sponsor pre-filed testimony and rebuttal testimony in this case?
I did.
Did you also sponsor responses to several interrogatory exhibits? Do you have any changes or updates to any of those documents you need to make today?
I do not.
And you did make a errata to one of your testimony filings, but that's already in the record.
Correct.
Do you adopt those documents as part of your sworn testimony in this case?
Yes.
Thank you. Mr. Sobolewski, did you sponsor interrogatory response RRU 407 in this case?
Yes, I did.
Do you have any changes or updates to that interrogatory response?
No, I do not.
Do you adopt that interrogatory response as part of your sworn testimony today?
Yes, I do.
Thanks. And with that, the panel's ready for cross.
Thank you. And let's see. Cross off that note. Then we'll turn to the company for cross-examination, please.
Thank you. Good morning. Good morning, Mr. Sobolewski and Mr. DeFever.
Good morning.
How are you?
Good.
Mr. DeFever, what materials from this docket did you review to develop the recommendations you're making to Pura in your pre-filed direct testimony and rebuttal testimony?
Discovery, testimony. I guess everything that came across my view.
Thank you. Did you review the revenue requirements direct testimony from the company and exhibits?
Yes.
Did you review the company's standard filing requirements, schedules, and work papers?
At a high level, yes.
Did you review the company's environmental remediation panel's direct testimony and exhibits?
Yes.
And did you review the testimony and exhibits of the UI rebuttal panel regarding revenue requirements, compensation and benefits, and environmental remediation costs?
Yes.
Did you review any other testimony and exhibits in this case?
Possibly.
Did you review all of the discovery responses and attachments that relate to the company's revenue requirement in this case?
I don't think so. I tried to keep up, but I may not have seen them all.
Thank you. And you're appearing in this docket on behalf of the Office of Consumer Counsel, correct?
Correct.
You filed direct testimony on February 13th and errata to your direct testimony on February 24th and rebuttal testimony on March 24th, 2025, correct?
That's correct.
And when I refer to your direct testimony this morning, I'll be referring to the errata to your direct testimony, okay?
Okay.
On page 2, line 22 of your direct testimony, you indicate that your testimony addresses rate base and operating income, correct?
Did you say page 2? You said page 2?
I believe so.
Okay. Yes, that's correct.
At this point in the case, all pre-filed testimony you have submitted is your final testimony, correct?
Correct. My SIR rebuttal did update my recommendation as far as the environmental remediation goes.
Thank you, and thank you for the clarification. When I said testimony just now, I was referring to the universe of your testimonies, the three
Okay.
pieces, correct? Okay,
Correct.
thank you. And in your direct testimony at page 34, lines 16 to 18, you state, my testimony is not offered as a representation of the Office of Consumer Counsel's final or complete position as to any issue in the case. Do you see that?
Yes.
And you testified in response to Mr. Wheel's direct examination questions a few minutes ago that you have no changes or corrections to any of your testimony, correct?
At this time, yes.
And now that your testimony represents your final testimony, as I believe you indicated a few questions ago, does it now represent the OCC's final or complete position as to any issues related to rate base and operating income in this case?
No, it represents my position, not necessarily the OCC's.
What other issues does the OCC have with rate base and operating income not described in your testimonies?
You'd have to ask them.
Is there another OCC witness who I can ask?
I'm just saying I don't speak for the OCC. I develop my ideas independently, and we may not always be on exactly the same page. And they may have different opinions after what occurs, even in the late file hearing. Things could change.
So if you're appearing in this docket on behalf of the OCC and you were hired by the OCC to review and take a position on the company's rate base and operating income, why doesn't your testimony address any other issues the OCC has regarding rate base and operating income?
I'm just saying I'm not necessarily aware. And again, I think it says elsewhere in my testimony, like issues can develop during the hearing. So there may be things that have come up during cross-examination that I don't address that they may decide to address later.
Thank you. And as the OCC's witness to provide evidence and opinions in this case, do you have a contract for services with the OCC, correct?
Correct.
Can you provide their contract for services as a late file exhibit?
Yes. Yes.
Thank you. I'd request a late file exhibit for Mr. DeFever's contract.
Sure, I am just,
That's something I could provide.
Yeah, we
Is
would.
the late file or?
I mean, I think Mr. DeFever is asking, I guess the question is, would the company accept it as a supplement, or would the company expect to cross-examine Mr. DeFever on the exhibit during the late file hearing?
I think in either event, we would have to evaluate that to see if Mr. DeFever would have to come back for the late file hearing based on the cross that comes now. But I think that would be a judgment call based on what's in it. Sorry, I can't commit to that at this time.
Attorney Wheel, should I treat that as an objection or are you withdrawing?
I'm sorry, it wasn't an objection. I think I was asking sort of an administrative question of the nature of Mr. DeFever's question to me, whether it had to be a late file exhibit, but it sounds like the company's requesting a late file exhibit. So we have no objection to that.
Okay. That is late file exhibit 57.
That's what I have too.
Oh, I'm so sorry. You're waiting on me.
I was.
I'm sorry, Attorney Vaughn. Yeah, confirming it was Leaf Exhibit 57.
Okay,
Good.
as long as we're all set, I wasn't sure if you were having some Lotus things up there that I was.
I was, but I got into it. I'm sorry. Thank you.
Thank you. Sorry for the delay there. Mr. DeFever, subject to what you just described regarding potential updates that may have occurred, information that may have come out during the evidentiary hearings, do your testimonies represent the OCC's position and case in chief in the areas of which you've sponsored testimony?
I'm just gonna, I don't know if this is I suppose it's an objection to the line of questioning, in that it's my understanding that OCC's ultimate position is going to be formulated in our brief and based upon the evidence that's in the record. So, I suppose Mr. DeFever can speak to his understanding of whether that's the case. But I guess I object to the line of questioning on the basis that I don't know that I think Mr. DeFever has already testified that he isn't aware of what OCC's final positions in this case will be.
Thank you. Yeah, Mr. DeFever, the line of questioning is getting at the disclaimer that Mr. DeFever included in his testimony regarding, we're trying to evaluate if it's his position or if it's the OCC's position such that we can, we devoted resources and effort to investigating it. And we're trying to figure out if we're on the same page that the positions that Mr. DeFever is putting forward to Pura represent the OCC's position, which understanding, there's briefing and things of that nature. If the assertions that Mr. DeFever is making are final subject to the updates that he's provided or that he noted earlier in his testimony.
Attorney Wheel.
I think that has been asked and answered, but if the company wants to hear him say it again, I guess I don't have an objection to asking it again.
Okay, so I will allow Attorney Vaughn to pose the question one more time. I will note that it's my understanding, subject to Attorney Wheel, that Mr. DeFever is here as an expert witness, not an attorney for OCC. Well, let me ask Attorney Wheel, is that?
That is correct. So, to the extent, I guess, to mirror some of the company's comments earlier in the hearing, to the extent that the questions pertain to Mr. DeFever's legal understanding of the kind of procedural structure of the case, he can speak to them, but his testimony is provided as an expert witness who isn't an employee of OCC and has the understanding he has about the mechanics of how rate cases work in Connecticut.
Okay, subject to that caveat, Attorney Vaughn, you're welcome to pose the question.
Sure, I believe my question was subject to the caveats you provided about updates that may have come about during the evidentiary hearing. Does your testimony represent the OCC's position and case in chief in the areas in which you sponsored testimony?
Yeah, I'm still not comfortable speaking for the OCC. This is my position. I can't say that in their brief that they're going to take the same positions I did.
Thank you. I'm going to turn you to cash work, or I'm going to ask you some questions about cash working capital.
Okay.
Referring to your direct testimony on pages 5 and 6 with respect to cash working capital, you recommend the use of the lead lag study approach that focuses more narrowly on O&M cash expenses plus taxes, referred to as the O&M approach, and by Pura as approach 1 in its decision in docket number 23-1102. Is that correct?
That's correct.
And are you aware that the alternative approach proposed by the company considers the cash working capital implications of all income statement items, referred to as the non-O&M approach, and by Pura as approach 2 in docket number 23-1102? Is that correct?
That's correct.
Would you agree that the so-called approach 2 was the approach historically authorized by Pura in its decision prior to its decision in docket number 23-1102?
I'm not aware of the exact approach. I know that they did include some non-cash items in prior cases.
And on page 3, lines 12 through 16 of your direct testimony, you state that, quote, cash working capital is the additional investor cash needed to cover day-to-day cash requirements caused by the timing differences between the company's provision of service and when the company receives payment for that service, As such, non-cash items such as depreciation do not fit the definition, close quote. Do you see that?
Yes,
In referring to depreciation as a so-called, quote, non-cash item, you would agree that the company's rates typically are set to recover depreciation on plant assets, correct?
correct.
And if depreciation were excluded from the revenue requirement, you would agree that this would have a real cash flow impact on both customers and the company, correct?
Could you repeat that?
Excuse me, if depreciation were excluded from the company's revenue requirement, you would agree that this would have a real cash flow impact on both customers and the company, correct?
Correct.
So notwithstanding your characterization of depreciation as, quote, non-cash, you would agree that the company's recovery of depreciation impacts the cash flow, correct?
Can you repeat that question?
I said, notwithstanding your characterization of depreciation as non-cash, you would agree that the company's recovery of depreciation impacts the cash flow, correct?
Correct.
You would also agree that would you also agree, excuse me, that this quote, that this cash flow impact describes the revenue lag, which relates to the period between when service is provided and depreciation expenses accrued and when cash is recovered for that service, correct?
I'm sorry, I'm gonna need to hear that again.
Sure. Would you also agree that this cash flow impact with respect to depreciation that we just discussed describes the revenue lag, which relates to the period between when service is provided and depreciation expenses accrued, and when cash is recovered for that service, correct?
I'm still not, the beginning is a little confusing to me. Could you start it?
Restate that. Would you agree that the cash flow impact with respect to depreciation that we discussed
Okay,
is consistent with the revenue lag, which relates to the period between when service is provided and depreciation expenses accrued and when cash is recovered for that service?
that's the part I'm not necessarily agreeing with when you say what do you mean by it's consistent with?
I suppose I'm asking you if we've agreed that depreciation has an impact on cash flow, correct?
I agree with that, yes.
And there is a lag between when depreciation expense is accrued and when cash is recovered, correct?
Correct.
Thank you. Would you also agree that the so-called approach 2 to the lead lag study recognizes this fact, taking the broader view that was formerly espoused by prior pure decisions?
Yes.
Thank you. Turning to corporate service charges. In your direct testimony at page 10, lines 19 through 20, you recommend reducing corporate service charge expense by $584,000 by removing the company's proposed inflation adjustment. Is that correct?
That's correct.
And your direct testimony also states that corporate service charge expenses have decreased over the last 5 years, and that, quote, as such, an increase based on inflation should not be assumed in the rate year for this cost, close quote. Do you see that?
Yes.
Your conclusion is based on the numbers in the table contained on page 10 of your direct testimony, where you show corporate service charges between 2019 and 2023, correct?
Correct. That chart shows that it decreased every year since 2019.
Okay, but you did not conduct an independent analysis of the company's corporate service charges to determine the underlying reasons for the cost changes between 2019 and 2023, correct?
I didn't need to do that. I can see when the cost goes down 5 straight years, who would assume that it's going to go up?
And you didn't, thank you. And you did not conduct an analysis to determine whether the factors driving the decreases in 2022 and 2023 would continue driving further decreases in the rate year, correct?
I didn't, but again, that's only one year out of 4 straight years of going down. So even if it had gone up 1 year, you still can't assume it's going to start going up.
Thank you. What is your understanding of the Massachusetts formula?
I don't know how to answer that. I mean, I'm aware of it.
Can you describe your understanding of how it works?
Can you show me where I discussed that in my testimony?
I don't know if you do, but I believe we've said that you've testified that you're an expert on here on behalf of OCC. Are you able to describe what the Massachusetts formula is generally?
I'd rather not. I mean, I understand the Massachusetts formula, but I'm not going to give a definition of it. I don't discuss it in my testimony.
Yeah, you testified that you reviewed the company's testimony, correct?
Yes,
Are you aware that the company discusses the Massachusetts
Yes.
formula with respect to corporate service charges?
yes.
And yeah. Do you agree with the company's description of how the Massachusetts formula works?
General, yes.
Are you familiar with Pura's final decisions in docket number 231102, where Pura materially reduced the revenues of both Connecticut Natural Gas Corporation and the Southern Connecticut Gas Company?
Yes, I have read that.
And based on your agreement with the company's characterization of the Massachusetts formula, therefore, all else equal, if the allocation of costs to CNG and SCG under the Massachusetts formula decreases, the allocation of costs to UI under that same formula would increase, correct?
Yes, but that's a large if when you say all else being equal.
In your review of the materials as part of your work in this case, I believe you previously testified that you reviewed the company's standard filing requirements, correct?
Yes,
Does that include SFR Schedule WPC-3.18?
probably. I can't say for sure.
Would you accept, subject to check, that at page 1, line 6 of that schedule, UI shows that its actual distribution corporate service charges in 2023 reflected an entry to move certain expenses covered by Public Act 23102, colloquially known as SB7, to below the line?
Yes,
And do you accept, subject to check, that this entry is part of the reason that UI's actual distribution corporate service charges in 2023 were lower than in 2021 or 2022?
I'd accept that as possible.
Sorry, Attorney Vaughn, I was just catching up. Was that a reference to C318 working paper line 6?
Yes.
Thank you.
Page 1, line 6. On page 12 of your direct testimony relating to the board of directors expense, you recommend a 75%, 25% company customer sharing of these costs, resulting in a reduction of $321,750 in the rate year, correct?
Correct.
You would agree that the board of directors provides an accountability and corporate governance function, correct?
Correct.
How do you quantify the 75%, 25% split?
It's high level. I didn't like 50-50 if I thought it was an even split. So 75, I feel is actually a conservative anything. As the board of directors serves has a duty to serve the shareholders. Ratepayers do get some benefit, but they're primarily serving the shareholders.
But it's not based on, that quantification's not based on an independent analysis or any new analysis of the actual functions of the board and how that splits between your view of
Correct.
customer and company, is it?
Correct.
Are you familiar with the merger settlement approved by Pura in docket number 150738?
No. I've heard it discussed, but I'm not familiar with the details.
Do you recall in docket number 231102 that you were cross-examined in, I believe, April of 2024 by attorney Daniel Venora on this docket?
I do remember being crossed by him. I wouldn't say very well aware of it.
Thank you. Would you accept, subject to check, that the settlement agreement approved in that docket included commitments to maintain the decision-making processes and authorities that pre-existed at the UIL entities?
Yes,
And would you accept, subject to check, that the settlement agreement approved by Pura in that docket included commitments to implement ring fencing measures?
yes,
And would you accept, subject to check, that the settlement agreement included a commitment that there will be no changes in the day-to-day management and operation of the UIL utilities as a result of the merger?
subject to check, yes.
And to your understanding, did the day-to-day management of the UIL utilities include a board of directors for each operating company prior to the merger?
I'm not aware.
Thank you. And in making your recommendation to Pura, did you research the role of the boards of directors of the operating companies at the time of the merger?
I did not.
And you have not presented any demonstration that the boards of directors have not been maintained in accordance with that merger agreement, have you?
Correct.
Would you accept, subject to check, that the merger settlement discussed previously included a commitment to name a Connecticut resident to the Avangrid Networks Board of Directors?
Subject to check.
And would you accept, subject to check, that the settlement agreement, which we discussed, included ring fencing measures, required, among other things, that UIL and each of the UIL utilities, quote, will maintain their separate existences as separate corporate subsidiaries of UIL and will hold themselves out as separate entities and will comply with all organizational formalities to maintain their separate existence?
Subject to check.
Thank you. Would you agree that these organizational formalities would necessitate a board of directors to serve in a governance role?
Yes,
And is it your testimony that all of this focus on local governance and organizational structure incorporated into this merger agreement served no benefit to customers?
that is not my testimony.
And would you agree that it's possible that these measures were included to assure accountability and local governance for the benefit of customers?
Could you say that
Said,
again?
would you agree that it is possible that these measures were included to assure accountability and local governance for the benefit of customers?
I'll agree that it's possible.
Is it your understanding that the company could obtain long-term debt or equity financing from the marketplace without a corporate governance function that would include a board of directors?
That's not my understanding.
Thank you. On page 14 of your direct testimony, with respect to overtime and premium payroll expense, you state, quote, there is no correlation between the base payroll and overtime and premium payroll, and that, quote, overtime and premium payroll costs fluctuate significantly. Do you see that?
Yes,
And based on that belief, you state that the OCC recommends using a 5-year average for these expenses, which reduces payroll expense by $2.76 million. Is that your recommendation?
correct.
You would agree that the use of the 5-year average does not capture wage inflation on payroll expense, correct?
I disagree. Um, for instance, the 5 years includes 2019, then 2020. Well, the 2020 will include inflation from 2019.
Would you agree that the 5-year average reflects the fact that the amount of overtime and premium payroll hours can vary from period to period?
Um, I'll accept that it does vary from period to period.
And while the average accounts for hours, it does not capture the effect of payroll changes on which those hours are charged, correct?
Well, again, it will capture the ones up until the most recent year. But, yeah,
Okay, and if the chart in your testimony is based on dollars, as you say in your rebuttal testimony, those dollars are derived from the number of hours in each of those periods, correct?
that's part of the equation, yes.
If the same number of hours of overtime and premium payroll expenses incurred in 2019 were incurred in 2023, you would agree that the expense would be higher due to wage increases over that period, correct?
Oh, no. What you're not considering is that these aren't necessarily the same employees from one year to the next. And new hires can be making less than older retirees. I mean, I think the chart clearly shows that this is a cost that fluctuates wildly. I think any assumed inflation is unwarranted.
I think you just touching on what you just said, in support of your disagreement with the company's position, you state that, quote, newer employees replacing retiring employees may have significantly lower salaries. Do you see that?
Well, I said it, yes.
And what does the word significantly mean in this sentence?
Just what common usage of significantly.
Can you quantify how much lower the salaries of the new employees are than the salaries of the retiring employees?
I cannot. I should also mention that it also doesn't consider effectiveness. You know, that as employees make more, they can become more effective.
And does your version of the adjustment incorporate any specific data regarding the number of retirements per year UI experienced?
It does not.
And do you have any data, studies, or other evidence to demonstrate that retiring employees are replaced by employees with significantly lower salaries?
No, but I think that's common knowledge.
But you have no data to suggest to support it.
Correct.
Page 5 of your rebuttal testimony also indicates that you disagree with UI's adjustment to your overtime calculations because it, quote, ignores any increases in efficiency and productivity that employees gain over time as their wages increase, correct?
Oh, page 5 of my rebuttal?
Rebuttal, please.
Okay.
And I believe you just sort
You
of
basically said the same thing. If you want me to double check it.
please do.
Okay. Okay.
How does the relationship between wage increases and efficiencies work? Is it one for one?
Oh, no.
Did you measure the relationship between efficiency and wage increases?
I did not.
And what evidence have you presented on the record regarding the relationship between wage increases and efficiency?
None.
Do you know why the company grants general wage increases?
In some cases, there's a union contract where they have to.
And what is that your understanding of the only instance in which the company provides its employees with general wage increases?
No, I mean, they could be giving wages increases outside of that.
Thank you. I have a few questions on incentive compensation. On page 17 of your direct testimony, you recommend a disallowance of 50% of the incentive compensation expense included in the rate year and calculate that 50% adjustment would be a reduction of $696,500 in the rate year. Is that correct?
That's correct.
And in your direct testimony on pages 16 to 17, you state that the design of the company's incentive compensation plan does not provide, quote, significant motivation towards greater effort, close quote. Do you see that?
Yes.
In making that statement, you've not actually conducted any analysis of the impact of the company's plan on employee motivations, have you?
No, but as it states in my rebuttal, I mean, if you if you know you're gonna if you get a bonus every year, regardless of your effort, that's going to impact the amount of in, incentive that the incentive comp will create.
Thank you. In supporting the quote that I just gave you on pages 16 and 17, you've not presented any type of compensation study or research or guidance prepared by a professional compensation analyst or services firm to support that statement or your recommended disallowance, have you?
No, but I should note that in OCC 296, we asked the company if they could provide any studies that would show that the incentive comp was effective, and they didn't provide any either. And incentive compensation, yes. And I should point out the burden's on the company to show that it's effective, not on me to show that it's not effective.
And you didn't provide an analytical derivation for your 50% disallowance, correct?
Correct.
Have you performed an analysis of how the company's overall compensation would compare to market if the amount of incentive compensation paid to employees were to be cut in half?
I have not.
And you've not provided any analysis of the company employee behavior or more generally for utility employees to support your recommended cut, have you?
Correct.
Would you agree that the company cannot provide service to customers without employees?
Yes.
And is it your testimony that the company could retain employees without paying those employees compensation competitive with other jobs in the marketplace that they could have?
I mean, it's interesting you ask it that way because I think it came out during the hearing that the company basically is offering less than market if the people don't receive incentive comp. So it seems like, right, it was stated the other day that so basically the company is offering new hires less than market unless they receive incentive comp. So they're asking new employees to like to gamble.
And just to put a finer point on that, I believe my question was about, bless you, by the way, whether the company could retain employees without paying those employees total compensation competitive with other jobs in the marketplace.
Yeah, I'm not testifying to that.
And you agree that the company's employees must have special skills to provide electric distribution service to customers?
Yes.
Would you agree that the company's employees should be held accountable for performing in their job functions?
Yes. That's my point.
And
They're all receiving the incentive comp regardless of their performance.
And would you agree that the company should maintain a management structure that properly holds employees accountable for their job functions, correct?
Correct.
And I believe earlier you used the term bonus. And in characterizing incentive compensation as a bonus, is it your testimony that there are no criteria that the employee must fulfill to be eligible for the payment at the end of the year?
I would say, I mean, there is criteria. However, apparently every employee has met that criteria every year for the last 5 years.
And thank you. And you would agree that employees would care about how much they earn in a year, correct?
Correct.
And do you have any research or information showing that employees are meeting the criteria without providing effort?
I feel that information alone shows that. I mean, I don't think you can have a workplace with hundreds of people and say that every person is exceeding standards. The company's rebuttal stated that a core tenet is that they want to incentivize to achieve above and beyond. And if you look at OCC 299, only 44 in 2023, only 44 of the 223 were considered exceeding. So 169 just came in as successful, and 10 were only partial, but they all received incentive compensation. So I guess from my side, the question is, it's not even a question. I don't think ratepayers should be paying for people who are giving substandard work for partial, or as shown through 2019 through 2022, actually listed as partially competent. Why would somebody who's rated partially competent receive any incentive comp? That would incentivize them to be partially competent.
Thank you, Mr. DeFever. On page 23 of your direct testimony, you recommended a disallowance of $144,015 for cafeteria expense in the rate year. Is that correct?
That's correct.
You didn't conduct an independent analysis of the potential loss in productivity if the on-site cafeteria were not available to employees, did you?
Could you repeat that?
I said you did not conduct an independent analysis of the potential loss in productivity if the on-site cafeteria was not available to employees, correct?
Correct.
And your direct and surrebuttal testimony did not consider the benefits of having the cafeteria available as an option for meals during emergency events, did it?
Well, I can't say I didn't. Well, it doesn't discuss it, but I didn't read anything in there that suggests that ratepayers should pay for utility employee meals. You know,
Just based on the answer you just provided, what's your understanding of the subsidy?
From what I heard yesterday, regardless of whether the cafeteria turns a profit or not, they receive a subsidy from the company.
And what is the purpose in your understanding of that subsidy payment?
The company claims they needed to make that payment to get that vendor. But again, as there's restaurants nearby, people can bring, I don't understand why ratepayers should have to subsidize those meals. Like if the company wants to pay that, they can, but I don't think it should be recovered from ratepayers.
And is it your understanding that it's subsidized, the subsidy is covering meals?
Yeah, well, it's going to the overall expense, I guess. It would be included.
Would you accept subject to check that the subsidy is paid to the cafeteria vendor and that employees pay for their own meals?
Yes, but they're not paying the full price of what that is costing. Because, well, I mean, the fact that you're trying to collect it from ratepayers means that there's an amount that's not covered.
Did you assess whether other dining options would be available to UI personnel during emergency events or on weekends or non-business hours when crews are preparing for storm response?
No, but I'm not, no.
Thank you. And did you assess whether the cafeteria option saves time for storm crews who work during off hours, on holidays, and the like?
I didn't, but, according to the company, I think they said there are 121,000 visits to the cafeteria. It seems like the storm use would be a very small percentage of that.
But you wouldn't know.
Right.
And did you conduct any assessment of annual cost savings resulting from the on-site cafeteria?
I read the company's claim that they assumed that every person that got a meal there would return to work 15 minutes early. I found that unbelievable. I'm not even sure why an employee would want that. I get a shorter lunch, so now I can go back to work earlier. All right. That doesn't make sense to me. What's the appeal?
Thank you. On page 1 of your direct testimony, you state that you're a licensed certified public accountant in the state of Michigan and that you are a senior regulatory consultant for Larkin and Associates, correct?
Correct.
You are not an environmental consultant, though, are you?
That's correct.
And you are not a licensed environmental professional, correct?
That is correct.
On page 30 of your direct testimony at lines 11 through 16, you initially recommended that Pura disallow all costs related to the East Shore site remediation, including $3.744 million of anticipated rate year remediation costs, $482,000 of amortization expense, and the corresponding rate base amount of $241,000 relating to already incurred costs for remediating the East Shore site. Is that correct?
Correct, but that was adjusted in my surrebuttal.
Yes, and you subsequently withdrew on behalf of the OCC your adjustment removing the $482,000 of amortization expense and the corresponding rate base amount of $241,000. Is that correct?
That is correct.
On page 29 of your direct testimony, you state that the company, quote, admits it does not know what the cost will be or what work will occur with respect to the proposed $3.744 million for rate year East Shore expenses. Is that correct?
I think you said what work will occur, but it says when will the work occur. Yeah, what I'm saying is it doesn't meet the basic known and measurable standard. If you say I don't know what the cost will be and I don't know when it'll happen, that doesn't meet that standard.
And I believe earlier in this cross-examination, you testified that you reviewed the company's environmental remediation panel's testimony and exhibits, correct?
Correct.
Would you agree that on page 11, or accept subject to check if you don't have it in front of you, that on page 11, lines 15 through 20 of exhibit UI ERP1, the company discusses that project estimated costs were based on an engineer's estimate and that the remedial work will extend beyond the rate year?
Sorry, Attorney Vaughn, could I just kind of catch up? Could you just repeat that citation?
Page 11.
And it was which exhibit?
ERP1.
Okay, the testimony.
Testimony.
Thank you.
Page 11, lines 15 through 20.
Oh, yeah, subject to check.
Thank you. And from your review of UI ERP1, you're aware that the company is targeting to start remedial action activities in the fourth quarter of 2025, correct?
Correct. Again, targeting, but they say they don't know for sure.
And from your review of exhibit UI ERP1, you're aware that the company's remedial or cleanup activities will include items such as excavation and offsite disposal of impacted, installation of an engineered control, site restoration, and other remedial support such as permitting, air monitoring, water management, remedial action, remedial oversight, verification sampling, and other activities outlined in testimony, correct?
Subject to check.
And would you agree that Exhibit UI ERP4 provides a copy of the remedial action plan for the East Shore project?
Subject to check.
And would you agree or accept, subject to check, that this remedial action plan was prepared by a licensed environmental professional?
Subject to check.
And from your review of Exhibit UI Rebuttal 1, you're aware that the company described the current status of the East Shore project that confirms the procurement schedule has been more accurately defined with a contract award anticipated in August 2025 and on-site remedial actions to occur between the fourth quarter of 2025 and the fourth quarter of 2026, correct? And I'll point you to page 56, lines 2 through 10.
Okay, it says that, but it also says the actual timing of anticipated remedial activities could vary. It also somewhere else it says some schedule variability. And it says that they're only in the remedial design and procurement phase.
Thanks. And your review of the company's responses to interrogatories related to this case included interrogatories on environmental issues, right?
Could you repeat that?
But you reviewed the discovery responses that the company filed to the Office of Consumer Counsel's questions on environmental remediation issues?
Correct.
And do you have the company's response to OCC 705 and OCC 705 UI Attachment 1?
I do not.
Would you accept, subject to check, that this response and attachment provide a detailed estimate from an engineering consultant overseeing the East Shore project?
Subject to check, yes.
And would you agree that page 3, or accept, subject to check, that page 3 of OCC 705 UI Attachment 1 provides a detailed estimate of the work to occur and the costs projected to be incurred in the rate year for this project?
Yeah, again, subject to check, but it's not it's the company stated the remedial estimate is subject to change based on the actual contractor bid estimates obtained. I mean, that's why I said it didn't meet the known and measurable standard. The company itself said, we don't know what this is going to cost.
And yes, and I'm asking you if the company provided on page 3 of OCC 705 UI Attachment 1 a detailed estimate of that work.
Subject to check, but
Thank you. You would agree that the response to OCC 705 explains that the company projects to incur approximately $7.488 million in the rate year, and that the company has requested to recover approximately half of that amount and to defer recovery on the amounts greater than that, correct?
correct.
And do you see that that response is dated February 4th, 2025?
No,
Would you accept that, subject to check?
yes,
And in your review of the materials for this case, did you review this response and attachment when you developed your direct or surrebuttal testimony?
I don't know.
Thank you, Mr. DeFever. You also filed testimony in UI's, a joint testimony, I should say, in UI's last base distribution rate case, correct? Docket number 220808?
That was with Bill Schultz.
Yes. And in that case, you provided testimony regarding the company's proposed revenue requirement and recommended some specific adjustments to the company's rate proposal. Is that accurate?
Correct.
And in your testimony in that case, you actually quantified the revenue requirement impact of all of your recommendations together. Is that correct?
Correct.
And would you agree that it's important to calculate the overall revenue requirement because that's what Pura is going to establish in its final order in this case?
I would agree. However, what I filed was never, it was high level. It was never going to be exact. It was more just to give a vague idea of what the impact of these adjustments.
Would you agree that without assessing the overall impact of OCC's recommendations, it's really not possible to determine whether the total effect of OCC's recommendations reflect UI's actual costs and allow it to maintain its financial integrity?
I wouldn't agree that that can't be done without receiving it from me. I would think that has to be done at the end when they decide which adjustments will be accepted.
And in this case, you've once again, you've recommended some specific adjustments to the company's proposed revenue requirements, some of which we've discussed today and others that we've not, correct?
Correct.
But in this case, you didn't quantify the revenue requirement impact of all of your recommendations together. Is that correct?
Correct.
Could you provide that quantification as a late file exhibit?
I can provide it right now. The thing is, it's at a high level. It doesn't show the flow throughs, but I do have a sheet that gives a basic quantification.
And yeah, as long as if you can provide an Excel version of your basic quantification of your impacts, I think we would appreciate that.
But again,
such that we could see it. Oh yeah, and would it be possible in a late file exhibit to show the flow through impacts that you maybe haven't done right now?
Yeah, again, I mean, they'll be high level, but it can be done.
Thank you. We'd like to request a late file exhibit for that. Or a quantification of Mr. DeFever's recommended adjustments and flow through impacts, please.
I'm actually going to object to a portion of the late file exhibit, which is the quantification of the flow through impacts, because that wasn't in the scope of Mr. DeFever's initial proposal. We can certainly provide a quantification. We can provide the quantification that Mr. DeFever internally provided to us of his recommended impacts. I would just also note that the flow through impacts ultimately require calculations of the company's rate base, et cetera, that again, Mr. DeFever wasn't retained to perform.
And yeah, we're looking for the support that goes through to Mr. DeFever's recommended adjustments. So
sure, we can
have.
Well, I can respond. We have I think we have a document that already exists that Mr. DeFever provided to us internally that was his measurement of the overall impacts of each of his adjustments, and that's what we could provide.
Assuming that that's updated for Mr. DeFever's latest recommendations, I think that makes sense.
Okay. So I'm gonna sustain the objection, and unless the company's withdrawing, but that I think we get to the same place either way, which is that we have a late file exhibit 58, which is to provide the support and quantification of witness DeFever's revenue adjustment impacts.
Yes.
Okay, thank you.
Wouldn't that not be a late file then if you're giving it to him now?
Well, it'll be a late file. I think Mr. Wheel or Attorney Wheel will file it in docket.
Okay.
Not to speak for you, Attorney Wheel.
Well, I guess I can ask the company. Mr. DeFever did indicate that he has it right now, and he can provide it. Is the company still nonetheless requesting it as a late file?
We'd like it in the record, and however we could get it in the record, I think if that's a supplement or a late file, we'd be okay with that. I think it's an issue as a late file, but that's seems.
I have been marking supplements as late files. I think it has the same evidentiary effect. So we'll mark it as late file exhibit 58.
Thank you.
Thank you very much. That concludes UI's cross-examination for this panel. Thank you.
Thank you. Confirming authority staff have no cross. Okay, thank you. Commissioner Karen. None. Commissioner Conti. No. A moment. I also believe that I have no cross. So Attorney Will, do you need a brief recess to consider redirect?
Yes, could we have 5 minutes, please?
Yes, we'll recess for 5 minutes.
Thank you.
Okay, if we can come back together and go back on the record, Attorney Wheel redirect.
Yes, I do have redirect. Mr. DeFever, the company's attorneys asked you some questions regarding your recommendation to divide recovery of the board of directors expense as between shareholders and ratepayers. Did any prior Pura decisions influence your recommended division of that recovery?
Yes. And in fact, I believe I cited one in the testimony.
Was the one you cited docket 220808, which is this company's last rate case?
Not sure.
In docket number 231102, subject to check, is it your understanding that Pura allowed approximately 23% of the board of directors' expense to be recovered from ratepayers?
Subject to check.
And in docket number 220808, subject to check, is it your understanding that Pura allowed approximately 25% of board of directors' expense to be recovered from ratepayers?
Subject to check.
So again, did you consider Pura's previous decisions with respect to this adjustment in determining your recommendation?
Yes.
Thank you. You were asked whether you could quantify the difference in compensation between new employees and retiring employees. Are you aware of whether the company has provided a quantification of that difference?
I'm not aware.
You're asked whether you've provided an analysis demonstrating the relationship between wage increases and efficiency. Are you aware of whether the company has provided such an analysis?
I'm not aware of any such analysis.
You were asked if you've provided an analysis of the relationship between the company's incentive compensation plan and the motivation of their employees. Are you aware of the company has provided any such analysis?
No, but I know we did ask for one, I believe, in OCC 296, and they did not provide one.
Thank you. You were asked whether you have performed an independent analysis of the potential loss in productivity in the on-site if the on-site cafeteria were not available to employees. To your knowledge, did the company provide any such analysis?
They provided a high-level calculation, but I don't think there was an analysis.
Thank you. And that leads right into my last question, which is when you say high level, what do you mean when you say that?
If regarding
When you testified that your overall recommendations were adjustments were high level during your cross-examination, what did you mean by that?
on that document, high level on that, it's simplified. We didn't run it through the company's model, and like I said, it doesn't have the flow throughs.
Okay, thank you. That concludes our redirect.
Thank you. These witnesses are excused. We will transition into the company's capital investments panel, and the authority staff will be first up to cross, please. Attorney Fountain.
Thank you. As discussed during the administrative matters, Chairman Gillette, Ms. Van Luling is at the panelist table to provide several read-ins, which we can do before we swear the witnesses.
Thank you.
Okay.
Yes, please.
Thank you. For read-in CC, we were asked if you need to hold shares of Avangrid or Iberdrola stock if you're in the long-term incentive program. And so just a reminder, we are not seeking recovery of the long-term incentive plan, or also known as the stock compensation plan within this case. And you are not required to hold any Avangrid or Iberdrola stock except for 5 named executive officers as per the SEC definition, were required to hold Avangrid stock prior to the stock repurchase. Upon the stock repurchase, that requirement went away, and no one pre the stock repurchase, post the stock repurchase is required to hold Iberdrola stock.
Thank you.
Then I also have DD, which the question was the work paper for where the Iberdrola charges are included. The Iberdrola charges are $3.3 million allocated to UI distribution, and those are included in RRP 20, page 1, company line 31. It's the Excel row 59. Then I was also asked for read-in EE where the Iberdrola agreement was. And I had referenced, we included the agreement actually in docket 220808 in the late file 83 UI attachment 2, but I will provide late file, I believe it is 57 with that agreement, if that works for you. 59, I'm off.
49? No.
59 maybe?
I'm sorry. You want to add a new?
I need to add it, yeah.
Okay.
I thought we had provided it, but we provided it in 220808, so it's not on the record in this case.
Okay, thank you. So provide a copy of the Iberdrola.
Allocation manual.
Thank you. Late file exhibit 59.
And then I also have FF.
Okay.
The question on FF was who makes the decision to terminate an executive? So an officer or an executive can be removed by the board, but it does not need board action to remove an officer. So the officers of the company can make the determination to terminate an executive. And so at UI, for example, that would be Frank Reynolds. So Frank Reynolds can make a decision to terminate an executive, as an example. But it does not need board action.
Okay, so to say that back to you, the board can initiate or approve, but it can also be initiated or approved by an executive.
Yes,
Okay,
exactly.
okay. Thank you.
Those are all my readings.
Thank you.
Thank you, Ms. Van Luling. I'd ask the panel members to please state their names and titles, beginning with Mr. Cole, please.
Yep. Good morning, James Cole, Vice President of Projects, Avangrid Service Company.
Adam McLaughlin, Senior Director of Investment Planning.
Charles Eves, Vice President of Electric Operations, UI.
April Tavares, Vice President of Accounting.
Thank you. And Mr. Eves and Mr. O'Loughlin, you were previously sworn in and previously adopted your materials.
Correct.
Thank you. So the witnesses who have not been sworn in, if you could please raise your right hand. I swear to tell the truth, the whole truth, and nothing but the truth under pains and penalties of perjury.
I do.
Thank you. Attorney Vaughn.
Thank you. Mr. Burge, as part of your preparation for this docket, did you provide pre-filed rebuttal testimony and exhibits in this proceeding, which were marked as exhibits UIWHRP 1 through 3?
I did.
Did you also sponsor responses to interrogatories submitted in this proceeding?
I did.
Do you have any updates or corrections to your pre-filed testimony or interrogatory responses not previously identified for the record in an interrogatory response?
I do not.
Do you adopt your pre-filed testimony and exhibits and interrogatory responses as part of your sworn testimony in this proceeding?
I do.
Thank you. Mr. Cole, as part of your preparation for this docket, did you provide pre-filed direct testimony and exhibits which were marked as exhibits UI CIP 1 through 11?
I did.
And did you also sponsor responses to interrogatories submitted in this proceeding?
I did.
And do you have any updates or corrections to your pre-filed testimony or interrogatory responses not previously identified for the record in an interrogatory response?
I do not.
Thank you. Mr. O'Loughlin, you were previously sworn in and adopted your materials, but in preparing for testifying on this panel, do you have any updates or corrections to any of your interrogatory responses not previously identified for the record?
Yes, in preparing for today's testimony, I noted that attachment included in response to RSR 38, which requested the meeting approval materials for the investment review group, inadvertently included an attachment from RSR 37, which were materials from another committee. We will provide the documents for RSR 38 in a supplemental response or a late file.
Okay, so late file exhibit 60, the company is offering to provide.
Correct, just to make sure that we have the requested documents in the record. I believe there was a transcription error or something along those lines that.
I'm sorry, you're trailing.
As Mr. O'Loughlin explained, I believe there was an inadvertent attachment was provided twice rather than the correct attachment. So we'd like to provide what was requested as either a late file or a supplement.
Okay, and the Mr. O'Loughlin's testimony reference is what, please?
It's the interrogatory response to RSR 38.
Okay, thank you. I will mark that as late file exhibit 60.
Thank you. And subject to those corrections to the panel, for the purposes of admission into the record, have you reviewed and do you adopt the interrogatory responses submitted by other individuals identified in the company's April 24, 2025 letter on witness panels in the area of capital investments?
Yes.
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 Thank you. The panel is available for cross-examination.
Thank you. We'll be getting cross for this panel by authority staff.
Good morning. Elizabeth Docket with the authority. I just have a preliminary question. As part of late file exhibit 1, is the company planning to provide an updated plant model?
Just bring Mr. Hurwitz up to the panel for
Yes.
Thank you. I have some questions about overhead costs, the indirect costs of doing business that the company accumulates in separate accounts and subsequently allocates to cost collectors. So you might want to have 2 attachments ready, RSR 285 attachment 1 and RSR 170 attachment 1. I'll just give you a minute to pull those up. And if you could pull up RSR 285, the narrative response to that interrogatory as well, that might be helpful.
Okay, I'm there.
For RSR 285 subsection C, the response included a statement that the information for 2020 is not readily available. Could you explain why that wasn't readily available?
2020 was the last year of the legacy accounting system, and the accounts and the configuration were different enough, though conceptually the idea of overheads was the same, that we didn't have the information available in the format that we do of today, where we have separate cost collectors and separate accounts that we've provided. And we did not have, we felt, a company expert from that time period who could provide the information in 2020 in the same format as we have provided the information in 2021 forward, only because of the change in the accounting system.
Thank you. So turning to RSR 285 attachment 1, and just so that we're looking at the same thing, it looks like UI reported capitalized overhead on row 15.
What tab are you referring to?
I believe I'm in the summary tab.
Yes, I agree. Row 15.
Thank you. And can you see where increases from almost 43.6 million in 2021 to over 59 million in 2023 and 2024?
Yes.
Okay. And for clarity as to how those expenditures relate to the company's application, and ask for the following late file exhibit. For each year included in this attachment, so 2021 through 2026, could you provide a quantification of the total annual amounts capitalized that are being sought for recovery in this proceeding?
Late file exhibit 61.
Understood. Thank you.
Thank you. And now, if you can keep that attachment handy, because I will get back to it in a moment. If you could go to RSR 170, attachment 1, and specifically the bottom line, which is row 62, that shows the total capital expenditures by year. Is that correct?
I'm sorry, did you say 170, RSR 170 or 171?
170.
170.
Attachment 1.
Apologies, I had opened the wrong attachment. Which row did you mention?
It's the bottom row, row 62.
And could you repeat the question, please?
Well, I was mostly making sure that you were there.
I'm there.
And that shows the total capital expenditures by year, correct?
Correct.
And so if we turn to columns S as in Sierra through V as in Victor, that represents 2021 through 2024, correct?
That's correct.
Thank you. So I'm hoping you'll indulge me with a little bit of math so that I can ask some questions based on that. And so if we take the amount of reported capitalized overhead from RSR 285, attachment 1, row 15 that we were looking at a moment ago, and we subtract those from the amount of total capital expenditures in row 62 on RSR 170 attachment 1 for those years, we would arrive at the total capital expenditures excluding the overhead costs. Is that correct?
Yes, that's correct.
Thank you. And for 2021, is that just over $99.9 million?
One clarification is that the overhead amounts are full UI company, and that in RSR 285, and the schedule in RSR 170 is just the distribution portion. So we couldn't do that math here without further analyzing how much of those capitalized overheads were part of the distribution segment versus the transmission segment. But theoretically, agree with your math.
Okay. Is there somewhere in the record where those distribution only costs are contained?
Can you clarify which set of numbers you're looking for classified by distribution costs?
Sure. So I think the testimony just a moment ago was that RSR 170 attachment 1 is not separated out for distribution only. So is there somewhere where distribution only is contained in the record for those values?
So to clarify, the numbers provided in the attachment 1 for RSR 170 are the distribution-only capital expenditures incurred for UI. The capitalized overhead amounts that are provided in the attachment for RSR 285 UI attachment 1 are total overheads by type for UI. So
Sorry.
a portion of those would allocate or have allocated to transmission investments.
Okay, sorry, I think I had my notes backwards there. So as to 285, is there somewhere where the total overhead capitalized for distribution only is contained, broken down by year?
I know there were several responses in the record where we provided account level information by project, where we showed total expenditures, and we do have separate accounts for overheads. It's not coming to mind anything where it's like really specifically summarized in that way. So we'd have to go back and review maybe which of those responses the information is contained in.
Okay, so I believe the question in 285 was asking for capital projects. And so now I'm understanding that these overhead costs were provided for capital projects included for both transmission and distribution, just to clarify.
Right. Reading the question, identify and describe each category of overhead costs that the company applies to capital projects. Generally, the overhead costs in their nature are indirect, so you don't know if they're transmission or distribution on their onset. So we collect them as a common cost that is allocated to transmission or distribution actual work orders based on a cost driver. So in responding to the question, we provided the summary of the overhead costs collected before allocation in the table. So they're the complete cost of each overhead type or pool.
Understood. So can the company provide the distribution only portion of that information provided in RSR 285 UI attachment 1?
Yes.
And ask for that as a late file exhibit.
Slate file exhibit 62.
I just need one moment. All right, so just to make sure we're all on the same page with this exhibit that I'm asking for. When we're talking about capitalized overhead, we're talking about the overhead related to the creation of plant in service. And in particular, now we're talking about distribution plant in service, correct?
That's my understanding of the late file, yes.
Okay, thank you. And that overhead is as a rate-making principle or accounting principle eligible to be capitalized because of its relationship to the creation of plant, correct?
Correct. So the activities that are capitalized from the overheads are activities required to bring assets their intended use and location in order to be used and useful to customers. So to add a little bit of additional context, we essentially have two types of overheads in general. There's the general construction and preliminary overheads that start as capital, which are capital activities specific, but they cover many work orders. So for example, you might have a field planner that's designing several jobs per day. So instead of having them time right to each individual work order, which leaves a little subjectivity to how things are allocated, we ask them to time right into a capital overhead pool that is then allocated on a cost causative driver only to capital jobs. So we find that has a more equitable amount of precision when allocating those types of costs to capital, rather than asking employees to track time every 15 minutes or what have you there. And then we have other types of overheads that are generally just supporting the staff and the staff that is working on all projects. So I think in testimony earlier this week, there were some questions about occupancy overhead. So that's a prime example, right? So occupancy is the cost of having our buildings and our people having offices and paying utilities in those buildings. So obviously the company performs both capital and operating activities. So we collect those costs in the occupancy pool and they are allocated between capital and operating expenses based on labor costs. And therefore, the capital piece also would be allocated between transmission and distribution. So we do take a first cut of, are your activities directly related to capital? Yes or no. And then those directly related to capital only allocated to capital jobs. And those that are not directly allocated to capital, but are necessary costs to bring our assets to our intended use, would start in the pools that start as operating costs and are allocated between OPEX and CAPEX, generally based on internal labor.
Understood. And so the original attachment number 1 provided to our SR 285, that does not, 100% of those costs are not included in the plant in service request in this proceeding?
That's correct. Both because some of them went to operating and then some of them went to transmission. My colleague makes a good point. Also, some of those projects would not be in plant and service. So if they're still in construction work in progress, then those allocated costs would not yet have made it into plant and service.
Okay. And so I think I asked at the start, right, for each of the overhead categories, that late file exhibit 61 is asking for you to identify the total amount of overhead applied to capital projects for each year for, oh, I'm sorry, I'm reading the wrong late file exhibit. Give me one moment. The quantification of the annual amounts capitalized that are being sought for recovery in the instant proceeding. And so what you just mentioned, right, that slice between what is currently proposed as the company's plant in service, that will be delineated in that late file exhibit, correct?
Correct.
Okay. And is there anything specifically that's been provided in the record to date that demonstrates how those costs are related to the plant in service that's being requested in this proceeding, that ties those overhead costs that later are allocated to specific plant in service. So in other words, something that would support what is going to be filed as late file exhibit 61. Is there something that's presently in the record that would support that compilation or summary?
Yeah, there was an interrogatory, and I think Mr. Hurwitz referenced it yesterday. I'm just trying to find the number, which describes which activities are included in which of those overhead pools, which would support the nature of the work and why it qualifies for capitalization. I just need to find that what interrogatory that is.
Sure.
Just 1 minute. Yes, 286, RSR 286, UI attachment 1, is the document explaining a little bit technically the mechanics of how the overheads work, but on page 3 of that response, it explains the nature of which activities are in which of the overhead pools. And the nature of the work is what qualifies it for capitalization or not.
Understood, but is there anything that would support the attribution of those costs to specific plant and service that's being requested in this proceeding?
I mean, that same document talks about our cost drivers and how we allocate those costs. So what's the cost causative relationship? Is it a cost that's based on internal labor or materials? And that's how, through cost accounting, you would apply all of your costs to the applicable projects.
Understood. Based on the record at hand, however, is there, I'll take a step back. Not every element of construction that has been completed to date is reflected as plant and service in this application. Is that a fair statement?
Yes.
Okay. And so there are a variety of reasons for that. Some plant is not completed in construction. Is that correct?
Correct. Some would still be in construction work in progress.
And others might not hypothetically be in this application for one reason or another, correct?
Hypothetically, yes, correct.
And so if we are just looking at the years in which these overhead costs were accrued, how would we be able to attribute the overhead costs to plant and service, which is requested in this application?
I think that's the intent of the late file 61 that you asked for, unless I've misinterpreted that.
No, that is what I'm asking for in late file exhibit 61. What I'm asking though is there additional supporting documentation, additional evidence outside of late file exhibit 61 where that exists? Or would late file exhibit 61 constitute the only answer to that question?
So the overheads are applied to the work orders that eventually are completed and transfer from construction work in progress to plant and service. We have had several responses, including the engineering audit, where we went through in detail all of the charges and line items to the individual work orders. So that's where the linkage is. It's the overhead costs are incurred in the year the capital costs are incurred, and that's how they're allocated. So if you have purchase materials for a capital job that you started in 2023, then when that purchase happens and when that capital expenditure happens is when you would have overhead allocated to that specific work order. And then that work order would flow through the life cycle and become plant and service whenever the job is completed and used and useful. So the overhead costs is inherently embedded in all of the information we've provided at the work order level and the support for the additional plant, the plant additions themselves by going from, the account and the work order all the way to the plant addition.
Thank you. So if we could turn to retirement overhead and looking at RSR 286 attachment 1. And I think the description, the category of overhead, this category of overhead is used for indirect costs associated with minor removal works, environmental services, bulk waste removal, pole butt removal, bulk scraps, etc. Correct?
Ms. Stock, you referenced RSR 286 attachment 1?
Yes.
And what page of that presentation?
To check.
Would it be page 3?
I would accept that if that's where you found it.
Yes, page 3.
Thank you. Can you just explain why this is included as capitalized overhead rather than recorded as a part of cost of removal?
It is part of cost of removal. So it settles to net salvage, accumulated depreciation. I think it's included here under the category of capital because it doesn't go to the income statement. It doesn't go to the P&L, but this particular overhead is allocated only to cost of removal work orders. So just like I was explaining before, if it's specific capital work, now this is identified as specific net salvage cost of removal work. And so the pool of orders that are subject to receiving an allocation are only cost of removal orders, and those are all settling to accumulated depreciation as part of net salvage.
Thank you. If I could just have one moment. If I could just ask, maybe it would make sense to supplement the late file that I've already asked for. If you could quantify the plant in service that's attributable related to the capitalized overhead that you're providing for each of those years from 2021 through 2024. Does that make sense? So I've asked for the capitalized overhead that's attributable to plant and service. And so if you could also just in that same, I assume Excel spreadsheet, provide the amount of plant and service for each of those years that corresponds to.
So to paraphrase, the total capital and service, how much of that capital and service is overheads proportionally? Is that what you're seeking by year?
Yes,
yeah.
Essentially, yes.
Okay.
Would that be supplementing late file 61 or late file 62?
I think it could be in late file exhibit 61. Just an additional line that reflects the total plant and service requested for each of those years.
2021 through 2026, I believe.
Yes.
Thank you.
Sorry, just one clarification on the late file exhibits. I assume in late file exhibit 61, you're only looking for the distribution portion of the capital plan. Because I just want to make sure I understand the difference between 61 and 62. Are you requesting in 61 that we do the full, this is all of the overheads, what went to distribution, what went to transmission, what went to general property, and then subsequent in 62, we just provide which portion went to distribution, or just seeking the distribution portion for both of the total capitalization that went into plant and service and the overheads that were part of those plant and service additions?
I think we're looking for in late file exhibit 61, the quantification of the total of the annual amounts capitalized sought for recovery in the instant proceeding, and the total plant and service requested for each year. And then we're asking in late file exhibit 62 for that requested data that was provided there for the distribution only component.
So just in those overhead pools, how much went to distribution, not how much is in plant and service?
I think it would be the same answer as in late file exhibit 61 for plant and service.
Right, maybe that's why I'm getting confused. That's what's the difference between 61 and 62? Because if 62 is related to RSR 285, that isn't plant and service, that's capital expenditures. So just making sure that I'm clear on what you want. If you want to see the distribution portion of plant expenditures for late file exhibit 62, and for late file exhibit 61, you want capital additions. Is that the distinction?
I think so.
So Elizabeth can, Attorney Tanaka can correct me if she disagrees, but what we're looking for is a quantification of the overhead capitalized attributable to UI distribution for each year 2021 through 2024. So that'd be basically an update of RSR 285 to only reflect UI distribution.
But not plan additions to UI distribution, capital expenditures to
capital
UI?
expenditures, yes.
Thank you.
And then in addition to that, we'd like the quantification of the planned service. So this is not talking about capital expenditures, but what was close to plant, to see what that was close to plant for 2021 through 2024 that was attributable to capital overhead.
Understood now. Thank you. I was getting lost in the difference between the two. Thank you.
And if I could ask for one more late file request in the same general vein, referring to RSR 111, attachment 2, we'd request a working copy of the Excel spreadsheet titled Overheads Technical Data Excel file, which is referenced on page H1 of RSR 111, attachment 2.
Late file exhibit 63.
Understood.
Thank you. All right, for this next question, I think it'd be helpful if you could pull up UI CIP 3, supplement 3.
We're there.
Thank you. And if you could turn to page 2, line 197. And that's project 004225, which is titled UI Regulatory Driven Efforts. Did you find that?
Yes.
And the description there is on a separate exhibit, which you could look at if you wish, but I'll just read it. And that's on UI CIP 6 at page 841. So the project description includes implement ongoing billing and customer care system upgrades as required by regulators. Subject to check. Does that sound correct?
Yes, that's correct.
And on UI CIP 3, Supplement 3, page 2, line 197, that contains plant additions of $17,357 in 2023, $28,328 in November 2024, and $128,205 in December 2025. Is that right?
That's correct.
And can you tell me what specific billing and or customer care system upgrades were implemented for that $17,357?
So, sorry, as we wait for our colleagues that would have more specific knowledge about those particular projects, I would mention that often with software development, we follow an agile methodology of implementation where you have small sprints, and as configuration is completed, it does go into service, and then additional configuration follows. That's sort of the wave of software implementation accounting that's come through in the standards in the last 5-10 years. So oftentimes with those types of projects, you'll see like a small portion or a portion of the configuration go into service, even though maybe the whole project is not completed, but that portion is used and useful and functioning as intended. So we often see with software that there's multiple, smaller additions over time as those implementation components of configuration are phased in to being used and useful.
Understood. So I think, I would like to know about each of those three, and really I'm looking for the content of, the results of them, not sort of questioning the accounting at this moment, just wanting to know what those three components are substantively.
I think we'll have to go back and look at the specific details. It seems we don't have that off the top of our head, specifically what those.
Sure, as a read-in or as a late file exhibit?
We'll provide a late file exhibit on what elements went into service there. And I think the company, made an effort in this case to supplement the standard filing requirements with a lot more documentation around the projects. We did draw a line at $500,000 because producing that documentation does have cost to customers. So many of the projects that had all the projects that had investments over 500,000 have documentation about what they were, but we did draw that line. But for that project, we can go back and provide that more detailed information.
Sure. And so just for clarity, that would be UI CIP 3, Supplement 3, page 2, line 197. And there are 3 plant additions, one in 2023, one in November 2024, one in December of 2024, and looking to see what the specific billing and or customer care system upgrades that were implemented in each of those 3 projects. or sub-projects. And if you could turn to UI CIP 4, page 3, please.
Attorney Tanaka, is that referring to the original UI CIP4 or one of the supplemental CIP4s?
I believe the original, and I think for my purposes, the redacted version would probably be sufficient. I don't know what you have access to readily.
I have access to all of them, but
have you located it? Yes. Okay. So the column on the right-hand side labeled ESP/GSP decision, that just indicates whether approval for funding was granted by the Electric Strategic Planning or Investment Review Group. Is that correct?
there's two different decision columns for each of the respective committees, but yes, that reflects whether an approval was granted.
And there's also a column there that indicates the date of the meeting when the approval was made, correct?
That is correct.
And if you look at the next page, please, on page 4, I believe it's 8 rows down, but you can find project code 800326 labeled UI CapEx meters.
That is correct.
And there's in the ESP GSP decision column, what does hold mean for the meeting date of July 12th, 2022?
So typically the decision log will reflect a decision of hold when during the committee, there were some questions raised by the committee members that required some type of follow-up. So in those instances on the final decisions, we'll record it as on hold. There will be some follow-up from the business and then action taken thereafter based on what results from that.
Okay, so 5 rows down on the same page, it looks like the same project is listed again for the July 26, 2022 meeting. Does that look right to you?
That's correct.
And does that mean that as of that date, the project could proceed and the hold was lifted?
That's correct.
And so if the ESP issues a hold for a project, the funding isn't permitted at that point, and there would be a subsequent meeting where that hold could be essentially lifted by a grant.
Yeah, and generally, yes, it'd be subject to the decision of the committee on how to proceed. But in this particular instance, I see that this was an IP4 request, which indicates it's a request for a change to the budget. So that could be an increase or a decrease to the funding. And so in that case, generally, if there's an increase requested to the funding, it would not be, the budget funds would not be available in the system for them for the project or the investment to utilize until the approval has been processed fully through this process.
Thank you.
And in this case, this is a program that allows us to purchase meters that are obviously in the critical path of us serving customers. So there are types of projects that are kind of binary decisions. Are we going forward with this or not? Then this is a project that is an ongoing program for something that is a basic necessity for our company.
All right, and on the same exhibit, could you please find page 2258? That's 2258, project 4311, the new scheduler UI project, please. So that's UI CIP 4 still, page 2258.
From there.
And for that project, I think the last page of that project maybe is on 2263, and that says plant additions September 2022 through 2024. And there's a column, total rate base additions, which totals 965,906 and I think 74 cents, correct?
Ms. Tanaka, I lost you. Could you say that one more time?
Sure.
I'm in the vicinity.
So page 2,263.
Okay.
The page there is headed plant additions, right? September 2022 through July 2024.
Sorry, there are two page numbers. I see, you're looking at the page at the top of the document. I got you now. Yes.
And the plant additions, the total rate base additions listed there is $965,906.74, it looks like. Is that correct?
That's what it says on this report. Yes.
Okay. Does that amount reflect all of the plant additions for this project during that time period?
Can I take a moment to cross-reference that?
Sure.
So the total here of the 965,000 does not agree to the total additions for that time period.
Could you explain why not?
I would need to reconcile this with the other supplemental exhibits to see where that falls in terms of the timing.
And which supplemental exhibits would that be?
UICIP 4 supplements 1 through 4.
All right. I think maybe we'll just put a pin in that for 1 second and I have a few more follow-up questions. So that same project is listed in UICIP 3, both the original that was filed with the application and UICIP 3 Supplement 3. You can pull both of those up and I can give you page and line items if that's helpful once you're there.
I'm there.
Okay. So UICIP 3, the original on page 4, line 266. And the total plan additions there equal a little over 1.8 million. Is that correct?
That's correct.
Okay. And on UICIP 3 supplement 3, page 3, line 282, the plant additions listed there total to the 2,024,543, correct?
So we're cross-referencing this to, I'm sorry, what page were you just referencing?
UI CIP 3, supplement 3, page 3, line 282.
Correct.
And it's just over $2 million.
In page 3, line 282, the total additions for the period?
Yes.
Yes, correct.
Okay. So could you explain, perhaps using those three, why the difference is in those project amounts, or do we still need reference to other exhibits as well?
So the CIP, the UI CIP 3, supplement 3 would have been accompanied with a UI CIP 4, supplement 3 exhibit, which would have provided additional documentation regarding the plant additions. And so that's kind of where I was referring to before, is that in the initial filing, it appears the amounts included in the CIP 4 exhibit didn't agree to the amounts on the initial CIP 3 exhibit. However, over the course of the supplements, it's likely that that information was provided. So that's where I would need to go through and identify exactly where that is.
Okay. So could I maybe ask for that as a late file exhibit to provide? Sure.
Yes, I think we would need to do a late file to.
Okay. So that would be a late file exhibit to provide the correct total plant additions for project 004311, also known as the new scheduler UI project. All right, if I can have one moment, please. Just to go back for a moment to those early late files where we asked for the quantification of the overhead capitalization capitalized attributable to UI distribution. Just wanted to ensure that that will capture any of the costs that were allocated to UI distribution from another subsidiary of Avangrid, another parent company.
Yes.
Thank you. And could you also please provide the allocations for UI transmission, just so that we can see the, because 285 originally included both, just for clarity of the record, please?
Yes.
Okay, thank you. So the most recent late file request is number 65 for the provide the correct total plant additions for project 004311.
Thank you. All right. Thank you. I don't have any further questions.
All right. Lori staff's all set.
I'm sorry.
Oh, I'm sorry.
Attorney Riley has a question.
Sorry, Attorney Riley.
Good morning, Jim Riley with the authority. I have a question regarding UPA 29. Whether that's Mr. Pereira.
We can bring Mr. Pereira up. I believe this is your holdover question, right?
Yes.
Armando, could you come up, please? Thank you. And Mr. Pereira was previously sworn in as part of the electric operations panel.
Thank you.
Good morning.
Good morning. So again, the references to UPA 29, and I could let you get that up.
I have it.
Okay, thank you. So this response references an investment grade energy audit. Where does this process stand currently?
We certainly see the value in the investment grade energy audits. We are intending to carry that following the installation of our building management system projects. So as you might know, we're upgrading our building management systems. We have antiquated systems that will benefit from new software, which allow for greater integration of, our management of the buildings. It also allows us to explore different technologies that might help us to become even more efficient. So for instance, one of the things that I'm interested in is light harvesting. But an investment grade energy audit could help us to then define, is it economically feasible? Does it make sense for us to implement that solution along with many others in that building? So the building management system program is driving that. And at the end of that, that's when we propose to conduct that level of audit.
Okay, thank you. And I know you've provided a timeline in terms of sort of these other milestones, but if you had to put dates on the milestones, what would that look like?
I suspect within the next 18 months, we'll be done with our BMS. Another thing that we're working on is that, our building at 180 has received well certification. So we're looking to renew our well certification. So in addition to the BMS, in addition to recertifying BMS, well, to then pursue the energy, integrated investment grade energy audit.
Okay, and I know you mentioned 180 Marshall. So the energy audit's taking place at all company leased or owned properties, or just 180 Marshall?
I'm thinking it makes the most sense at 180 and 100 Marshall Road, which are our largest and most dense facilities.
Okay. And are these, is the company anticipating that it'll seek cost recovery from ratepayers in a future proceeding, or will this be shareholder funded?
Yeah, I couldn't speculate at this moment, but we may.
Okay.
Thank you.
Thank you. No further questions, Chair.
Thank you. Now we're all set. Okay. Thank you. Okay, we will take our lunch break. Let's come back at 1:05, where we will resume crafts with the OCC.
Thank you.
Actually, all blank document. Oh, no, the problem. It's a whole group. Oh, yeah. Yeah. Fuck the shroud. Sure.
Thank you. We can go back on the record unless there are any administrative matters.
No, I don't believe we have any other outstanding read-ins. So we can, I think, go back on the record.
Not a problem. Then let's resume cross by the OCC, please.
Good afternoon, Tom Wheel for the Office of Consumer Counsel. I wanted to start with some kind of general questions about CIEP 4, the original, which is currently, the large PDF is currently loading on my screen, so I actually need a second. Okay, I'm there if the panel's ready. So just to confirm, this is what was filed with the application as documentation for the plant that was in service at the time of the application. Is that correct?
This exhibit is intended to support the plant listings that are provided in Exhibit UI CIP 3, which documents all the different projects for the plant in service at the time of filing.
Okay. I asked you.
I'm sorry, and we intended it as a supplement to the standard filing requirements to explain the basis for the projects, why we did them, what they were. For projects over $500,000. And again, that there's a cost to producing this. We drew a line at $500,000 to try to balance the cost with providing the information that the authority would need in looking at the plan additions that we made and why we made them.
And on behalf of the OCC, we appreciate this exhibit. It's helpful for us, so thank you. And we understand the $500,000 cutoff. I just had a question about it's maybe similar to some of the questions that authority staff had earlier, but if you go to page 383 of that document, this is just sort of an example. Let's just ask a question about how it works. Page 383 is for a program that, because it's for ongoing corrective and reactive maintenance of existing assets, I assume that program is continuing today. Is that correct?
Yes.
Okay. I was just curious why on page 383 it kind of cuts off the plant shown here as of April 2024.
So the reports that we provided here have differing time horizons and times when they were created. So for this one, it was likely created in that time frame, which is why, or maybe slightly after that, which is why it limited its numbers to that.
Okay.
And I think the key distinction here is that this report is intended to be more of an engineering report to support information on overall how the program is developed, managed, the standard project summaries. So for this specific project, it would be found on page 377 of the same exhibit. And this reflects the additions that align with the additions that are shown on Schedule UI CIP 3.
Thank you. The reason I was asking, well, one of the reasons I was asking was that was my question, like why why it was kind of cut off a couple months before it was filed. But the other reason I was asking was that, the number as of April is this 86.533 million. And if you look at the original CIP 3, thousand, sorry. As the company's probably aware, like the schedules are presented in $1,000, so I'm used to adding 3 zeros to every number I see, but I'll try to get used to that. If you look at CIP 3, The original one that was filed with the application. Is this program on line 64 of page 1?
Yeah, substation betterment is on line 64, correct?
Okay. So I guess, and again, this is a question just about like how to use these two exhibits together. It seems like CIP3 is recording plant that's above and beyond like the level that had been the level that's covered by CIP4. Is that correct?
No, the number that's reflected on UICIP3 would agree to the document that I mentioned. So in exhibit UICIP4, there's a number of different documents, and those are intended to provide the details for the projects. Every project in that exhibit has a project summary document. So it's typically the first document within that project's binder after the cover page. And that document will include the additions reflected as of the time of filing, which covered the period through the end of July 2024.
And you said that was on page 377 of CIP4?
Correct.
Okay. Okay. So for instance, the bottom of page 377 shows in 2022 that 378 number that ties to the 377,954 on CIP3. Is that just so I'm understanding? Like that's
right. Not it again.
Okay. Thank you. Gotcha. I see. And here I am adding zeros, but the 1.487 million on the bottom of page 377 ties to well, it doesn't exactly tie to the 1.48. Oh, 1.487. Is that what I said? Yes, it does exactly tie to the 1.487 in the last column of CIP3, right?
That's correct.
Okay. Thank you. Yeah, those weren't trick questions. I was just literally trying to learn how to compare the two exhibits. Thanks.
Ms. Wood, or Attorney Will, you're raising a good point. I mean, as you go further in some of the documents, these are from different points in time potentially. So every number may not tie out to that you look, especially through the engineering documents, because they may have been produced at a different point in time.
Understood. And by the way, I should have started with like a basic question. The testimony discusses how the company planned to update both CIP3 and CIP4 through the pendency of this case, and the company has done that, correct?
That is correct. We've submitted 4 different supplemental filings for both exhibits.
Thank you. I just wanted to make sure I had, so the most recent one as of today would be the 4th supplement for both CIP3 and CIP4?
That's correct. And that covers the time period with actuals through March year to date. And we do intend to submit a supplemental filing number 5 that will include actuals through the month of April.
Okay. Thank you. I have a couple of questions, well, it's a bunch of questions about more particular projects or programs. I want to start with project number, well, I'll start with the page number reference first. It's CIP, the original CIP for page 131. which is project number 801941. Is that the project number then?
I'm there.
Okay.
The Route 1 Metro North State Project.
Thank you. This project, as I understand it from reading this exhibit, was driven by Connecticut Department of Transportation's bridge replacement project. Is that correct?
It was, and more specifically by the Metro North need to change the design of the bridges so that the trains through that area can go faster.
Yeah. So that was a bridge over the Metro North Rail in Stratford. Is that correct?
Correct, on Route 1.
Okay. Do you know if that bridge project from Connecticut Department of Transportation had a CTDOT project number?
I think that state number, I believe, is that number. Subject to check, at 138-245.
Okay.
I'm getting approval from the back of the room that is the case.
Okay. You said 138 dash, sorry, where is that on CIP for it? Oh, right at the top there, 138-245. Okay, thank you.
And just a little context on this project, so back when our substation was built in the 60s, it was built at grade with the railroad. And Route 1 is a bridge that goes up, maybe 20 feet above that grade and goes across the railroad. There were no conduits in the bridge when we built the substation there. So we ran our duct line up the railroad right away to the side of the railroad tracks. The work the state had to do put the bridge abutment directly on top of our duct line. And after months of discussion, they concluded that they couldn't safely construct their bridge abutment with our conduits there. So we had choices of how to run those cables, and there were 8 cables that feed the majority of the town of Stratford there. The design ended up with a horizontal directional drill under the railroad in general. As part of the project, the state provided conduits across the Route 1 bridge. So we also, this is a 100-year opportunity to get those conduits in the bridge. We also, created the path to utilize those in the future.
Okay. Thank you. I unfortunately have some experience with horizontal drilling, and that is not cheap. Is that correct?
It was cheaper than the alternative.
Okay. I didn't mean that as an indictment of this project. I was just sort of saying, if you got to drilling horizontally is not a cheap way to do it, it seems.
It was a much more direct path to go in that direction under the railroad with a horizontal directional drill than it was to go up Route 1 and around the horn.
Thank you. So if I look at the 4th supplement to CIP 3, this project is line 18 on that. Yeah, I'm looking at the 4th supplement filed.
Okay, we're there.
Okay. And I have the right line. Is it 18? Is that same project?
Sorry, we are not there. We're in Exhibit 4.
Sure, yeah. I'm on UI CIP 3 supplement 4.
While he's navigating, you can ask your question. I may know it off the top of my head, or I may need to reference that.
I was just going to reference I just wanted to make sure I understood that as of this supplement, the total plant in service, that the total line of that supplement shows the total value of the plant in service as of the filing of the supplement, which is 16.871 million.
While he's validating that, I believe it would. Adam will give me that answer in a second here, but yes, and that would include the capital cost of our project plus the reimbursement that we get from the state for doing that work. And in general, that reimbursement is 50% of what they deem as participating. That participating element is a negotiation between us and the state, and they have general rules about what is participating and what is not. Our project needs to end in us connecting all the customers back. So in some cases, there are differences between what the state defines as participating and what we need to do, to move our duck line. In addition, that 50% is then decreased based upon the used life, which, I mean, if you think about it, it is fair that substation's been there since the 60s. They're not going to pay us from the state for a brand new duck line. So we get the remaining life of that duck line back as a reimbursement.
Thank you.
So that net plant would be the net of the two. And it's 16.871.
Okay, thank you. And I actually was going to ask about the company's response to OCC 373, which you might not even need to open. That question was about state projects, and it described, Mr. Eves, what you just described about the 50% reimbursement standard. My question was just this, I think you've already answered it, but this is one of those projects that's described in that response. Is that correct?
Yes, this was, a portion of it was in the state right away, and as a result, they reimbursed us.
I would just add also there's a policy and procedure that the state follows that's called the State of Connecticut Reimbursement for Construction Utility Policy and Procedure Manual. So that's the document that guides how much we can seek recovery for our projects.
Okay. Is that document in the record?
I don't believe it is in the record, but we can provide it. The state provides it to us for use in our supportive billing. So.
Okay. I mean, I wasn't sure. Does the company not have it? Like, would you have to request it from the state, or does the company have it?
No, we have it. We receive it from them to support what we are allowed to invoice and the formatting and such. So we do have it on file and we can provide it. It's the state of Connecticut's document, not ours, but we do use it in the course of business.
Okay. And well, before I ask for it, I just want to understand, does that lay out like the policy generally, or are you talking about like documents that are created on a per project basis?
It has the specific formulas that we use for reimbursement. So there are things in there like maximum amounts, like Mr. Eves referenced the 50% and the useful life credit, and it has like the methodologies. And then we would have the supporting invoices according to those methodologies that we would have invoiced to the state and then received reimbursement. And we also have audits with the state over each of the projects.
Okay. And the methodology, would that be specific to the negotiation that Mr. Eves referenced, like on a specific basis, or is that a uniform methodology?
I think the methodology is uniform. What specific assets it applies to, and are these part of the project or not, becomes the negotiation generally.
Okay. Could the company provide that document for the late file?
Sure.
Should I just refer to it as the State of Connecticut Allocation Manual? Okay, thank you. Late file exhibit 66.
DOT project allocation.
Thank you.
On bouncing back to CIP for the original that we were just looking at, one page further down on page 132. I just noticed and this is a question about a statute. I understand that I'm not asking for an interpretation of that statute. I just saw that there was a reference to, it says this project is CTDOT state driven and regulated per Connecticut state statutes 13A 126 and 13A 98F. Do you know what are those references to, like a standard that describes this relationship with the state?
I think those generally pertain to the fact that we're a guest in the public right of way and are obligated to move if the state requires us to move.
I see. Okay. Thank you. So I think you already testified this, but this project, the company had no choice to, like, when the state says you got to move your stuff, you have to move it, right?
For the public good, if they're going to place a bridge abutment on top of our duck line that feeds, an entire town of people, and that duck line is at risk and their safety is at risk as they do the construction, then yes, I think we're obligated to move.
Okay. Thank you. Do you know, is this bridge completed?
Our work on the bridge is completed. Whether they are completely, there was actually, we had we had an incident there with some of the state's construction there recently. So they're still doing work there, but I believe the bridge is completed across there. No, okay, it's not 100% complete, but our work is essentially complete on this.
Okay. Thank you. I am just curious, do you know offhand, like whether in our world, completed can mean fully completed versus kind of in service? Are people able to use the bridge yet? Do you know?
I haven't been there recently, Mr. I mean, through construction, they were able to use the bridge. Are they complete with all of everything they need to do? I could get back to you pretty quickly. I could talk to our project engineers that are out there every day.
Okay. I don't even,
but I've seen our as-built. Our as-built are at an end state of completion.
Thank you. Going back to the I referenced before, and maybe it might be worth opening this time, the response to OCC 373.
Sorry, OCC 373?
Yes. And the narrative response, not the attachment.
OCC 373.
Let me make sure that I'm not telling you a number that doesn't exist.
I'm there.
Okay. The narrative response says that it talks about a betterment portion and describes that as the net of the project cost and the reimbursement amount to which the state agrees. The reimbursement amount to which the state agrees, I think you were just referencing that before, is that shown as CIAC or kayak on the ultimate plant documentation?
Yes.
Okay. And the betterment portion, is that, so understanding that the portion, like we talked a minute ago about how there's a negotiation about like what proportion of the project will be subject to the 50-50 split. Is that an accurate depiction?
Yes, there's a general negotiation around what part of the project, the physical assets, would be part of that 50-50 split. And then there's the assessment of the used life of those assets. And then I think the issue around the betterment term, that there's kind of an engineering use of the betterment term and there's an accounting use of the betterment term. And as many terms, those are different. Our definition for state projects is that's the net of what the state is willing to pay for and what we need to do to deliver the project.
Okay. So the betterment portion, is it the combination of the 50% as well as anything in addition, as well as anything that wasn't like that the state that wasn't included in the negotiation? In other words, using a hypothetical project, like if the total cost of the company is 20 million, the amount the state agrees to put up front 50% for is 15 million. Would the betterment be the 7.5 million that's the company's half of that negotiation is the company's responsibility plus the 5 million that the state didn't agree to?
Yes.
Okay.
And an example on this project, the state, as they were rebuilding the bridge, allowed us to put conduits in the bridge, but they did not feel that extending the duct line from our substation out to those conduits was part of their project. Now, this is a 100-year opportunity for us. If we don't get that bridge is right in front of our substation, as electrification takes hold, having those conduits is a value to customers. So we proceeded with connecting those conduits so in the future they could be used.
Thank you. On OCC 373 attachment 1, which is the attachment to the response we just talked about.
I'm there.
Is this project shown on Excel row 33?
Yes.
Okay. So that shows total CapEx of 17.557 million and the CIAC of 4.808. That's the state's contribution.
Correct.
Okay. And as we just went through before, well, it shows 8 million in betterments, right?
Correct. In the column that says betterment, it shows 7.939 million.
Thank you. I rounded up. So the 7.9 million plus the reimbursement of 4.8 million gets to 12.8 million, right?
I'm sorry, Attorney Will. Your question again?
I was adding the 8 million of betterments plus the CIAC of 4.8 million and getting to 12.8 million, just combining those two. So I was just confused about what the delta between that 12.8 and the total CapEx of 17.6 comes from.
Yeah, so in this exhibit, the calculation of the betterment portion, and to use your hypothetical example before of the $20 million project, the state agrees that 15 million of that project is in the direct conflict of which 50% we will receive the kayak contribution, 50% the company is responsible for the expenses for. The betterment, it would be that remaining 5%. So it wouldn't, or I'm sorry, the remaining 5 million. So it wouldn't be the 5 million plus the 7.5 in the schedule. It would be the 5 million piece.
I'm still a little confused. So the CIAC, I call it kayak. Can I say kayak? Does that work for you guys? The kayak is 4.8, which means that the company also put up 4.8, and that's
that kayak is the result of an agreement on the 50% and then removing the used life credit from that amount that they defined as 50%. So I think that's where we're losing the kind of the betterment number there. So what you're not seeing is that remaining life credit being applied to that kayak. The number they agreed to was much higher than that 4.8 million because that substation and the duct line that was replaced was from the 60s.
Okay.
We could provide the invoicing support for this project if that would be helpful, along with the manual as an example.
Sure, that would be helpful.
Tie it all back together as part of the LFE 66.
Sure, that would be helpful. And that would be for this particular project?
Yes, and then you could see how the manual relates to an actual project.
Sure. Thank you.
Okay, so you just want me to amend the entry for lay file exhibit 66 to provide information or an example of how this manual applies to which project, please?
Code for the project is, or I think we could just say state number 138245, bridge replacement.
I'm sorry, 138245?
Yes.
Thank you.
Thank you. Going back to CIP 4 on page 153.
I'm sorry, I'm there.
Oh, okay. I'm looking at the engineering recommendations section, and there's a note there that says, upon completion of the bridge, UI would undertake additional work in the area to provide for the present and future operational needs of UI. Is that the 100-year opportunity you were referencing before?
Yeah, there were two items there. One was that connection of the duct line going across Route 1. There was another small area where we had duct line coming up from the other direction. So after we went under the Metro North Railroad and came up onto the street, there was a place where the cables kind of porpoised, and there was duct line a couple 100 feet away. So we also closed in that 200 feet of duct line to keep those feeders underground. So those were the two core elements of that statement.
Okay. And since you mentioned that UI's work is over, it's unclear whether the bridge is yet. Am I reading too much into upon completion of the bridge in this? I mean, it sounds like this work didn't necessitate DOT's bridge being complete in order to do that work. Is that correct?
That was work on the periphery of the bridge. So, and again, this document was written, months ago, many months ago. The other thing is, I mean, this is a 100-year view of that area, right? Us building a new substation in Connecticut is a very significant effort, and we face, a lot of opposition. The last substation I built back in 2005, the people pulled their kids out of school and had signs that said, "Stop UI, we don't want to die." So we look to the future. This is an opportunity here to ensure that we have the connectivity for that property that is a substation, will continue to be a substation, to be able to get out of there and serve that community for the next 100 years.
Thank you. The nature of my question was just to make sure, like, because this is saying that what I take from this phrase is that there's work to be done after the bridge is completed. I'm just trying to sense, like, is there still work to be done on this project after the DOT project is done, or has UI completed the project at this point?
This concept is around the fact that we have this new exit opportunity that we didn't have in the past. Because they put the conduits across the bridge, there is an opportunity for the future, for reliability of Stratford, for additional electrification, to get more circuits out of that area in any more efficient way than going up the railroad right away.
Okay. So there is no portion then of the 16.872 million that's currently in plant that is part of that future vision. Is that correct?
The path is there, but the cables to feed that are not.
Okay. Thank you. Is that a future project that's anticipated as part of the company's rate year plant proposal in this case, or is that further out?
That could potentially be decades out.
Okay.
But again, the opportunity to get across that bridge is once in 100 years. The state likely won't be rebuilding that bridge for another 100 years.
Okay. Do you know what portion of the plant in service is attributable to that part of the project?
That could be defined.
Would that be a late file or a read-in?
That would be a late file.
Okay.
Attorney Wheel, is this the same project number?
It is the same project number, yes.
Anticipating the reason for that question, however, while the state has the road torn up, while the state has the traffic control set up, while we're inconveniencing the public, as the construction is done, there are savings to our customers to do this work in conjunction with that. If we come along later and do it, number one, we're now tearing up the new pavement that the state of Connecticut has put in place. When we do that, we need to pave curb to curb to restore that. They're not generally happy with us, simply replacing the area that we did. So there is a benefit to customers when those projects are going on to do it once, do it the right way, and share the cost with the state. So we're not doing it twice.
Understood.
So for the late file exhibit 67, you requested the proportion of the project attributable to what specific?
To the future reliability benefit referenced on page
153 of CIP 4, if that was the page you're referencing. That's the reference to the
yes.
Undertake additional work in the area.
Yes.
Statement. Okay, thank you.
Thank you.
And to be clear, I'm not testifying here, but to be clear, and maybe even to emphasize some testimony from earlier today, OCC hasn't developed a position on everything yet. So the nature of my questions aren't, I just don't want you to read into my questions thinking like, oh, this means that they're cutting something. Yes. It's more, honestly, we're just trying to get a sense of how to look at stuff. So hopefully.
Honestly, I did do that, but and again, I just want to lay out, we look at things in a total life cycle cost mode, right? We're here. We've been here for 125 years. We expect to be here for the next 125 years. So as these projects come to us, we want to take the long view and give customers the total life cycle solution that is best. We could have spent a little less dollars here, but then come back and inconvenience them more and spent more in totality on delivering the same scope that I think is in the best interest of customers.
Understood. Thank you. The next project I want to ask about is on page 166 of the original CIEP 4. This is the Second Point project.
Second Point Bridge, yep.
Okay. And at the top of that page 166, it talks about how UI had identified the road as having overloaded poles 7 years prior to the project, including 4 primary feeder circuits, and notes that this is a violation of our standards. You see that?
Correct.
What standard was that? Like, is that a violation reference to?
It would have been the structural loading, the NESE structural loading on the poles.
Okay.
That over time, the assets that were added to that pole, to those poles, put the poles in a position where they were overloaded.
Okay. But is my understanding from this that the overloading condition was like cataloged 7 years before the project started?
It was identified. Now, let me set a little context around this project. So there's a couple things going on here. We have overloaded poles. We're looking at a solution there. The state is also talking about putting duct line in the bridges. We have a number of aerial cables feeding a heavy commercial and industrial area. There are a lot of trucks on those roads in very close proximity to our poles backing in and out. So through that area, there are 5 feeders that are exposed to being impacted by either vehicular traffic or by extreme weather. Now, in 2020, I was actually participating in a legislative hearing. I was sitting in our office on Teams because that was back during COVID. There was a discussion going on, and a tornado came through our territory. That tornado went right through that area. It crossed I-91 a couple 100 feet north of those aerial cables. It sheared a step-down bank pole. So that was a 45 class 1 pole with 2 galvanized steel conduits on it. It cut that pole in half. Went across the highway, devastated the neighborhood next to it. Had that tornado been a couple 100 feet to the south, we would have had 5 feeders out there with multiple sections of aerial cable down. Now, stepping back, and this is the context of this project, so bear with me in just 1 second. The company has 200 miles of aerial cable that leaves our substations. We come out underground. In general, we go a few 100 feet in underground and rise to aerial cable. There are several areas where we have 4 aerial cables on a pole line. That is a significant amount of exposure. Last year, in preparation for the hurricane season, the Connecticut Demis produced a hurricane awareness presentation where they talked about what a Category 1, Category 2, or Category 3 hurricane would do to Connecticut. Now, I've been here for 35 years. The worst I have seen in my 35 years here has been tropical storm force winds. 70 miles an hour. The destruction of the wind is proportional to the square of the wind speed. So when we have a Category 2 hurricane in Connecticut, we will see 110, 120 mile an hour winds. The impact of those winds will be exponential from what we have seen. Connecticut Demis predicts massive destruction of the trees in Connecticut, 25 to 50% in a scenario like that. If that occurs, when that occurs, our 200 miles of aerial cable will be significantly impacted. We keep about 10,000 feet of stock. We have a handful of people that can splice that cable. We have a handful of vehicles that can put that cable up. So we begun, as part of the resilience program that was begun a while back, we begun a program to put those cables underground. We did 2 projects. We did one on Clintonville, one on Route 5 in North Haven, and this one. And this one was really precipitated by the fact that the state was doing part of the work for us by putting those conduits in the bridge. This area goes through wetlands. I'm not sure if you've ever driven down this road on the way over to Universal Drive in North Haven, but these poles are set in wetlands. So you get Category 1 or 2 hurricane force winds through that area, those poles are likely going to just come over from the force of the wind in that wetland environment. So we believe this project and the one we did on Clintonville Avenue will ensure that in a massive weather event, those areas have resilient, reliable service.
Thank you. We asked you about this project in OCC 402.
Yes.
And that response notes that the company shares space on the pole with the telecommunications company, and it's the responsibility of each company to maintain their space on the structure and the responsibility of the custodian to maintain the pole.
I believe this line of questioning was going down the path of why doesn't the telecom company pay for it? You know, why is this your issue?
Well,
and the issue is that we're trying to remove the aerial cable exposure. So it was a fact that the poles were overloaded, but even if we resolve that, they're still exposed in the air to that, having those 4 cables there serving that industrial area. And when we had that tornado, that was the first phone call I got from the municipality. When are you getting that area back? If there were 4 aerial cables, I mean, that was their first priority for me. So what I'm getting to in this response is that it's not resolving the overload issue that's the scope of the project. It's getting rid of that exposure of having all of those cables up on that pole line.
Were the telecommunication lines also undergrounded as part of the project?
I don't believe they were, but I don't believe they have the same, level of exposure that, they have more of a network system than a radio system. So I think, I don't know their business circumstances, but I think the outcome of something like that is different for them than us.
Okay. So and I really not like bearing a lead here. I'm just trying to understand what's going on with the project. So there are still poles on this site with telecommunication cables on them?
Our feeders. So the other irony is that after every storm, I'm asked, why don't you just underground everything? Right? I'm asked that when I go to municipal meetings. I'm asked that when I'm at a cocktail party.
And the answer is because then we ask you, why are you undergrounding everything?
Right. And why does it cost so much? So in these 2 cases, we undergrounded the express feeders. Right. So that's just straight down the road, right in the middle of the road, simple duct line. Undergrounding everything requires us branching off to every service underground, tearing up every lawn, tearing up every parking lot, knocking on every door and saying, hey, we're going to transition your service from overhead to underground. So the overhead service to the customers along that right of way still exists on the pole line, but the express feeders that serve a big chunk of the commercial, industrial, and residential area of North Haven are now protected underground for most of their path to where they serve. And again, the key issue for us is in a massive weather event, the skill set, the materials, and the equipment to replace that aerial cable is very limited. New York doesn't use it, Maine doesn't use it. There's a handful of utilities that do, so even the mutual aid is limited. And we've begun this kind of slow and steady wins the race program to start dealing with that, especially where we have 2, 3, or 4 cables on the pole line. And we started with the ones that had 4.
Understood. And back up a little, you anticipated my question. My question was actually driving towards a somewhat more nuanced question of why don't the telecommunications companies pay for some of this? And the reason I'm asking is, has this relieved the pole overloading issues that would otherwise affect their assets? The fact that the company has removed its lines from these poles?
I mean, we share in that cost as co-pole owners across our territory. In this case, us removing those cables that put tremendous stress on the poles solve that issue. So in that case, they didn't have to step up, but in many, many other instances, they do. Right, where the combined loads of all of our assets, and we'll get into this next week, I would imagine, ad nauseum. The combined loads of everyone result in a condition where those poles are overloaded. In this case, us solving our resiliency issue took the overload issue away. So they didn't have to contribute anything to this, but in many other instances they do.
Okay. I guess I'm just asking sort of conceptually, and maybe this is maybe sort of like a rate making thing more so than an engineering thing, but conceptually, do the telecommunications companies benefit from this project for the reasons that we just discussed?
I think they would say we caused the problem in the first place by putting such big cables on the pole line, that our general construction wouldn't have burdened them in that way.
Okay. So there is no like avoided cost to the telecommunicate. Oh wait.
So I think there was a compound need here. If it was only the overloading, then we would have replaced those poles. And I think in general, the poles along that road are actually telephone custodian poles. They would have had to replace them. We would have went to them and said, hey, this is the solution here. And we would have jointly borne that cost. We had a different problem. And when we solved that problem, we eliminated their problem. So in this case, they benefited in this one instance, but this is very rare. The vast majority of those instances, they're contributing as we are to resolving those issues.
Thank you. This line of questioning isn't even really specific to this project. My kind of what I'm getting to here is there like and maybe this is a question, let me know if this is a better question for the pole attachment panel. Is there a place in the process of the planning for this project to determine whether it's appropriate to seek a contribution from the telecommunications companies for a project like this, where like is there a part of the planning process where that analysis is performed?
So if the need is a structural issue on the pole, then I would say yes. If the need is UI's resiliency of those multiple aerial cables on the pole line and ensuring that we can continue to provide reliable and resilient service after a major weather event, then no, I think to me, in fairness, that the electric utility should bear those costs of doing our project to get our facilities underground when they are happy staying above ground.
But doesn't this exhibit OCC CIEP 4 reference the overloading condition as a reason in addition to the resiliency concerns of I mean, can you explain to me my understanding is that the resiliency concern is directly related to the overloading of the poles. Is that correct?
Not the overload, the existence of multiple aerial cables in the air in an extreme weather event.
Okay.
And exposed to truck traffic that's backing in and out of the UPS parking lot and all the different industrial businesses along that very narrow roadway.
Okay, understood. But there is also the reference to the overloading. So isn't
So, and that was an engineer, like the engineer is kind of checking off his list of problems here, and that was one of them.
okay.
And you're right, in hindsight, I mean, in looking at this, that should have been framed more around the resiliency, but the engineer, hey, this is overloaded, you know, something needs to be done about this.
Okay.
And maybe I can just add a little bit to the recovery piece that you said, you know, so generally there's two ways that the company is sharing costs of investments with the telecom companies. So one is joint ownership. So if we have a joint ownership agreement and we install a pole and they own 50% of the pole, they need to pay for 50% of any of those capital improvements. And the other is through the attachment rates, which in part inputs to those rates are the investments in the pole account and then the maintenance costs of the pole accounts. So there are mechanisms according to those existing agreements of which we would receive recovery of part of the cost from the telecom companies. And I think Mr. Eves mentioned in this case, if we had just put in new poles, then those mechanisms would have kicked in and they would have incurred part of the cost of the project. But because the engineering decision was not to replace the poles, but to do a new technical design in order to improve resiliency that didn't result in poles, then the attachers are not triggered those mechanisms for them to pay a portion of the cost.
Understood. Looking back at OCC 373 attachment 1.
Are you waiting for me to say I'm there? I'm sorry.
Yes, I'm sorry. So you're there, right?
Yeah.
Okay. So this project is on line 18, labeled line 18, which is Excel row 48 is where it starts. Is that correct?
Correct.
Why isn't there any CIAC on this project?
So let me confirm with my colleague for 1 second. So in this case, we have a pole line down the road. The state is rebuilding bridges that we don't currently have duct line in, and allows us or constructs the duct line on our behalf. So in that case, they're not like impacting our existing infrastructure. We are benefiting from them providing us, you know, the partial underground path down this road through those wetland areas where they have bridges. So this is we're working with them to provide this underground path, but we're not in conflict with our underground facilities the way we were on Route 1. Does that make sense?
I think so. So this isn't the kind of project we discussed before where there was a negotiation with the state about their contribution to the project?
So the key difference here on the On the Barnum Avenue Bridge project, they put their bridge on top of our existing duct line and made us move. In this case, we have 4 aerial cables running down a pole line, and we say, hey, that's a problem for us. We understand the state is doing construction on this roadway. They're going to be rebuilding the bridges across the wetlands on this road. And we go to them and say, while you're doing that, provide us an underground path, through those bridges while you're reconstructing those. So there's not existing infrastructure that they're impacting that would drive that kayak. They're providing us a path.
Gotcha. I noticed on CIP 3, and you can, that this, yep, the original CIP 3, this is on line 19 of that exhibit. My question is just, it's in the state and municipal kind of section. Does that section just kind of encompass work that coincides with state work?
And again, we don't live in a perfect world of silos. So part of this project is we have to get our poles away from their construction so they don't electrocute themselves while they're building the bridges. So we gain the benefit of building the duct line, but part of the project too is working with the state so that as they have the cranes there building the bridge, we get our facilities out of their way while they have those cranes erected. So we coordinated that with them. We called it a state project because we're working with them, but the outcome of it was to get that duct infrastructure that we could leverage to create this resilient design.
Okay.
I also just wanted to add one point about a clarification on the accounting, because I think it refers also to the bridge project and the future benefits that we were speaking about earlier. So underground conduit and tunnels is its own retirement unit. So when those become used and useful and ready for service, they would qualify as plant additions under our accounting standard, even if you don't have conductor running through them and they're not connected to other circuits. So I think when Mr. Eves was talking about, that infrastructure for the future, that infrastructure does represent retirement units they're properly includable in the plant. So we do have the LFE, and we can clarify, what was the cost of that conduit or tunnel, depending on the technical term used. But the reason why it's appropriate as a plant addition is because it is its own retirement unit. Just wanted to clarify that.
Thank you. Yeah, and the nature of my questions, and it's again not a gotcha, but going back to OCC 373, like what we had asked in that question was just generally kind of like what are these state projects in UI CIP 3, 14 through 23, and that's where I first learned of the what we discussed before, where the state can reimburse. So that was my understanding from that response is that state reimbursement scenario was applicable to all of those projects in that section, but that's not necessarily the case. Is that correct?
Where they directly impact our infrastructure and make us move it. And in this case, they gave us, a different solution.
Okay. So it sounds like, is it the distinction between when the state approaches the company and says, we're doing something here, you've got to move this, as opposed to maybe, like I know, for instance, in like the natural gas, I'm sure for the electric side too, that the company seeks synergy where if the state's opening up a highway and that's a good time to perform to complete a project that's necessary in the eyes of the company. The distinction between those two ideas, is that sort of what you're getting at?
We had to work with them to do two things here. We had a need that was different than their need, and we put those two things together, I think, to produce a solution that was in the best interest of the public over the long term.
Okay. I want to move on to some questions about meters. Starting with UI CIP 4, page 288. Yes. So I'm looking at the work type section and it has these 5 bullet points, which I understand to be kind of various reasons why the meter work needs to be performed. Is that correct?
I mean, this is our program, yeah, to ensure that we have the meters we need to connect customers, which is obviously a critical path item for us.
And
there's a variety of reasons why we would install meters, from solar to AMI or AMR replacement to new connections to the items list.
Yep. Thank you. And one of those reasons is that for some meters, there's the referenced failures of because of component deterioration.
Yes.
So, and that references a meter population installed between 2010 and 2016. Is that all the meters that were installed in that time frame that are experiencing that component issue?
There were 165,000 meters in that population installed in that time frame that have the potential to have that issue.
Okay.
That's what's called a supercapacitor. So it's an electronic element that sits above the communication board of the meter, that generally under warm conditions leaks an electrolyte that then causes the meter to not communicate.
Okay.
So we began at kind of a general awareness of an issue in 2019 and 2020, around the time of Isaias. We became kind of fully convinced that we had an issue. We developed a plan. We communicated in our customer service meetings with Pure about the plan, and began working with our vendor to understand where it existed, and they can see it in their, when the meters stop reporting, they can give us a report of where they believe this is occurring. And we have been systematically going after replacing those meters month after month. When they're not working, those customers are getting an estimated read. So we are proactively responding to ensure that we're billing those customers where they'll let us in. And there's a very small subset where we're having some issues with that, but in general, we're proactively dealing with the issue as it arises.
Okay. And the plan I saw on page 289, that is the plan to replace 8,000 of those every year.
Well, that's our estimate of what will fail. So we're replacing them reactively, trying to get as much of the life out of the ones that are not failing as we can. But poised that when we see the failure, a month later, we're getting in there and replacing them.
Okay. So this isn't just a program that's systematically replacing every meter that was installed in that time frame. It's like based on it's reactive.
Actual failures.
Okay. Thank you. So some of the meters that are being replaced presumably are being pulled out of service prior to their expected service life. Has the company calculated an expected stranded asset cost to this?
No, because meters are a group asset account. So any undepreciated investment theoretically would go into the accumulated depreciation reserve. And so we would need to address that in the next depreciation study if the statistical analysis supports that we should have a higher rate. But because we plan to continue to have a meter account and investment in meters, there is time to adjust for those rates. It would be different if we were getting out of the meter business altogether. Then we would need to evaluate whether there was a stranded cost component. And I think there's other testimony in the case about water heaters, which would be that example, right, where we're no longer going to have them. But because we'll forever have meters, there's opportunity in the future to adjust and would not result in stranded investments.
Okay. Thanks. And this might not be a question for this panel directly, but there is no depreciation study in this application. Is that correct?
Correct. General guidance is that you would do one every 5 to 7 years. We evaluated whether we should do a study in this case, and we didn't think that enough time had elapsed since the last study to have a material impact on depreciation rates, and therefore chose not to have that consume the time of the case and focus on other matters.
Okay. So the depreciation rates that are currently I'll back up a little. Did the last depreciation study consider this program, or was that prior to this program taking effect? This particular component of this program, that is to say.
So this would have been had already begun. And the consultant, when they did the study, they interviewed different departments to understand, is there anything, technology, maintenance, business process where they can input their judgment into the study and the rates. I do remember that we did speak to the meter department with the consultant, so they would have incorporated the history and then the expected future change in the rates that were proposed. I would just say that, the 220808 did not result in rates being consistent with the depreciation study the company submitted. But we did follow that practice in order to propose the rates.
Thank you. That is why I backed up on my question about the rates and focused on the study. And there's a reference on page 289 to LNG no longer servicing AMR meters. And this is, I think, we're getting to a different part of this program, which is the AMR rollout to replacement with AMI. So LNG is no longer servicing AMR meters after 2026. Who is LNG? What does that stand for?
That's Lattice and Gear. That's our vendor that has the kind of the head-end systems that we implemented many years ago.
Okay.
We use their meters, and we have another vendor whose meters are compliant with their communication network as well.
Okay. Did the company receive like a service bulletin saying that the service was going to be
through our communications with them? They indicated that is the end of their support horizon for that system.
Okay.
And we had planned in 220808 to have gotten rid of those meters by now. We submitted a plan that will allow us to do that in this case. So that is our target.
Okay. And you said it was a communication. The reason I'm asking about a service bulletin is that I found it helpful to look at service bulletins in other cases, not having to do with UI, where there have been suggestions about service periods ending, and the bulletins maybe didn't exactly match what I was hearing from the company. So is there anything that in this case, or that could be filed that shows that
specific communication?
Yeah, I mean, if it's an informal communication, I don't need it. I was just asking I was more asking, like, was there an official bulletin that went out to kind of all of their customers like you see in a normal service bulletin, or was this more sort of a direct communication?
We have continual communications with them because they're, forming the service of the cash register of our company. I believe there are formal bulletins. I could take a late file and provide that if you'd like. But it is, it's been the topic of conversation for quite a time.
Okay. I don't need a late file on it. The question was more just whether it was an official bulletin or whether it was communicated. Thank you.
Sorry, Mr. Will, go ahead. Or Attorney Will, go ahead.
Sure, you can go on, Mr. Wheel. In response to OCC 246, the company stated that the expected useful life of these meters was 18 years.
Yes, and coming from the approved depreciation rates applied in 220808, is we don't individually track. These are not an individual item that's tracked, so we rely on the average service lives as defined in that study.
Thank you. Well, and I'll cut my question. I have the same question. Is there a stranded asset issue with these meters, or is it for the same reason that there isn't?
I think for the same reason that their meter plant account is going to be existing, that there's an opportunity to adjust depreciation rates to recover these without any sort of rate shock impact to customers.
Okay. Thank you.
And these AMR meters are older than than the population we described. I mean, they would date back before 2010, most of them.
Okay. So I guess, yeah.
Chances are they're approaching that or beyond.
Okay.
For AMR.
Yeah, because I saw in response to OCC 875 that the response there, we asked like when they were installed, and the response was between 99 and 2012. Is that correct?
Yeah, we've had AMR since the late 90s, yes.
So you mentioned, so,
and then we were, transitioning to AMI in the 2010 timeframe.
Okay. So is it fair to say that the bulk of these meters are tending towards the earlier end of that installation time frame that you mentioned, the 99, like closer to 1999 than 2012, given that you were transitioning to AMI in 2010?
I think there's going to be a population distribution across there. I would think that they were installed in bulk early on, and then some maintenance was going on in those middle years.
I think that's why we refer to the average service life, because we don't want to misrepresent anything. The only information that we rely on basically is that statistical analysis, which is the average. So some of them may be earlier, older than 18, younger than 18, but the average is the 18-year service life.
Understood. So like a meter that was installed, a meter that was installed in 2012 with an expected average service life of 18 may have been expected to last until 2030, but would you say that the gap between now and 2030 is like a normal in range, is a normal distinction? You're just speaking to the reason to use averages as opposed to actuals. Is that
it's like a bell curve, right? The average is where group depreciation and overheads are my favorite topics, where you expect some assets to continue to generate depreciation past the average because some assets are not going to make it to the average. So it's not as, accounting 101, like with a truck where you could say, we bought the truck here and it's going to be fully depreciated there. The group compensates for those assets that don't make it to that average life. So we, in the case of group accounts, tend not to try to break them out because I feel, less accurate than the methodology that we use.
Understood. I'm sure everyone in this room is very sad that we won't look at Iowa curves in this hearing.
You're welcome.
On page 289 of CIE 4 at the bottom, are you there?
I'm there.
It says the AMI deployment plan pending on regulatory decisions on rate case and negotiation with LNG for a service extension after December 2026. Could you explain what the negotiation with LNG reference is?
In the event that we have to, that the AMR meters are still there, then we would, talk to them about what could be done to ensure that we can accurately bill our customers. Like it requires some incremental cost above, what we're paying in the support today.
Okay.
If we get there.
Thank you. So fair to say then that what this is suggesting is that if it were necessary, it might be possible for, and I'm not suggesting that this is what OCC's position would be advocating for, but it might be possible for LNG to continue to service the meters beyond the 2026.
That would obviously be a negotiation.
Gotcha. Thank you. Looking at CIP 3, the original filing, on line 29. Actually, hold on, I might be referencing the supplement. Just one moment. Yep. Well, yeah, so for CIEP 3 supplement 4, line 29, do you know the proportion of, it shows that there's a 5.9 million in plant as of this supplement for this program, right? Supplement 4, CIEP 3 supplement 4.
You're referring to the UI CapEx meters project?
Oh, yep, I was looking at the wrong line. So it's line 31, right?
Okay.
I can see why the 5 million number, it sounded off to you. So it's $17.5 million in plan, is that correct?
That's correct.
Do you know the
I'm sorry, go ahead.
Do you know the proportion of that's attributable to the like 5 reasons for replacements that are listed in CIEP 4?
I can start, maybe Mr. O'Loughlin wants to add something, but meters, of course, are unique in that they're pre-capitalized devices. So meters become plant additions upon receipt because the FERC Uniform System of Accounts expects them to be sort of, let's say, reusable. So when you read the standard, it talks about when you receive it, whether in service or not, or in reserve or not, I think is what it says. It's a plant addition. And then it can be subsequently installed and removed over its life. And every install and remove would be an O&M or an OpEx activity. And then you'd have the final retirement. So what you see for plant additions is when the materials come into the warehouse, the meters, not necessarily when they're installed for the different reasons Mr. Eves was just explaining.
And through the discovery, there were a number of questions on, what occurred during COVID, and this obviously is an asset we have to have, right? We cannot not have meters. And the lead times on these exploded during COVID. So we did, react to that and to ensure that we would have a quantity of meters to continue to serve our customers and to do this replacement work that we need to do. So that did, create some additions that were different than the past.
Understood. So if I track along this line in this exhibit, I see that the number, the plant value changes over time. Does that reflect, like, has the company been steadily purchasing meters that, do the plant addition kind of components of that change over time reflect adding new meters to inventory?
Yes, that's the way I would describe it. And I can't speak to the purchasing process. I'm not an expert on that, but I do understand sometimes they'll make bulk purchases, whatsoever is the most, cost effective. And I think as Mr. Eves explained, there were some material type shortages that started to happen during COVID. So they're planning to have enough of those materials on hand, results in some bumpiness to the plant additions.
Understood.
And we did respond to a variety of data requests. At the serial number level, all the meters we purchased, their status, there are data requests on how many meters in each category. So there's a lot of information on that in the record.
Yeah, I was just curious if from the kind of capital planning perspective or the operations perspective, like how often the company purchases, how those decisions are made about when meters are purchased.
we're forecasting the volumes that we see. So, I mean, something like the super capacitor issue that we would get together and, you know, discuss, okay, we're going to need to increase our stock of meters, that the lead time issues would drive conversations. The concept of replacing the remaining AMR meters with AMI is going to be part of the forecast. Then you need to turn to lead times. You know, what's our expectation of when we can get the meters and how early in advance, and how can that change, right? Can it continue to get worse? Do we need to order them right now? And I think, you know, during the last couple of years, that has been a significant concern for many assets in our system.
And I presume there's part of that would also be trying to determine, you'd need to, I presume, keep a number of meters on inventory in the event that for just regular replacement as meters fail, correct?
And new connections, and yes, so we have awareness of, you know, every use that we have for meters. Solar installations, you know, require additional meters, and that goes into our forecast and our thinking around ordering.
Okay. Do you know why there was a there was a negative plant level and that reflected here in December of 2024 of $4.4 million?
Back to overhead rates. Another part of the meter cost, and I was explaining the pre-cap devices of how the initial install is capitalized and the final removal is capitalized, but everything in the middle is O&M. So part of the cost in this project is the actual installation labor. And so we establish rates where the team of folks that install meters, when they go out to install the meter, it's in their hand. They don't know if it's brand new or if it's refurbished. So we have them charge all of their time to O&M. And then we look at the proportion. The cost causative driver in this case is the proportion of new versus used meters, which we can pull out of the inventory tracking system. And so then we adjust the rate throughout the year. Subject to check, I believe that this is the true up of the rate throughout the year to account for how we actually landed on the number of installed meters being brand new versus refurbished.
Okay. So refurb is booked to O&M and the brand new is booked to plant. So this is just adjusting to correct for refurbished meters that were booked to plant prior
for the
to this.
labor and installation costs to make sure that we estimate it and assume, I don't know the actual numbers. Let's say we assume that 50% of all the meters installed are going to be brand new. So we set the overhead rate to take the total cost of installation and 50% of it to capitalize.
Okay.
And then at the end of the year, we look and say, did we end up at 50-50? Or in this case, did we end up with a lot more refurbished meters installed, and so therefore we shouldn't capitalize the labor associated with those, and would make an accounting adjustment in the same year.
Understood. I thought I heard you say the first time that the default was to book to O&M. That's why I was confused about how it went negative. But
well, right. So,
sure.
But we have them time right to O&M. And then we run an allocation that says take part of that O&M and capitalize it. And so our allocation was too high and we needed to make a correction, and that would be reflected as a plant addition because the rates are annual. So we try to hit them, but if we don't hit them, we correct them in December.
Understood. Thank you. I'm gonna ask some questions about the net metering project. which is on original CIP 4305.
I'm sorry, you referenced CIP 4?
Yep.
And what page?
305. This is again the original redacted CIP 4, not a supplement.
Okay, so this was a net metering change project?
Yep.
That you're referring to? Okay.
Yeah. So this was an IT project, right? To change the SAP system.
Correct.
Okay. And there's a reference here for, it said it's to accommodate the two new renewable energy tariffs, the buy-all and monthly tariffs. That's on page 306. Just for clarity, is that referencing the RRES tariffs?
We had Mr. Roby here yesterday for RevRec. I don't see him in the audience. One of our IT representatives is approaching, so let me.
Okay, I can take it as a read-in. I'm 90% sure the answer is yes, but okay.
The answer is yes.
Thank you. On page, and this might be a read-in also or a question for a different panel, but on page 307 of CIEP 4, under risk of no action, it says risk of NOV and fine from CT Pura if not completed by regulatory due date. Do you know what the due date, like what the reference to the regulatory due date is on that?
Not having been involved in this project, I don't know. And the sponsor again was here yesterday. We could get that as a read-in, their perception of that.
Sure.
Where that existed.
Believe that is read-in GG.
Okay, and yeah, if I could just have the due date and the perception that came from,
okay,
like the docket number or whatever else it is. And I'll keep asking questions about this, but it might be similar. I'll just keep asking questions about it. Do you know if UI provided an estimate for IT costs associated with implementing these new tariffs in docket 200701?
What's the total of that docket?
200701.
Or the general subject matter?
The general subject matter was the implementation of the new tariffs that became RRES and NRES. The new renewable energy solutions programs.
So I'm told we did create estimates for this.
Okay. Subject to check, was that estimate $500,000?
Okay. Definitive information on that as we speak.
Okay. I'm wondering if a late file might be a solution here because I think I'll probably have a bunch of questions about this project. So
okay.
Could I ask maybe if the company could provide a late file? Maybe I can cancel that read-in, Madam Chair.
Okay.
Could provide a late file referencing the regulatory deadline that's referenced in explaining the reference to the regulatory deadline explained in CIEP 4, page 307, and also explaining difference, if the company agrees there is one, between the cost estimate provided in docket 200701 and the plant that's currently in service for this project.
And the cost estimate you're referring to would have been provided in what time frame? In the 2020 timeframe?
Yeah, yep. It was one of my first dockets here up here, so it was a while. I mean, not that I've been here that long. It was in 2020.
Okay.
Yes.
Yeah, I think we can track that down and work on that late file. Is there, Attorney Wheel, a specific filing you're referencing from 200701 to, I mean, we can find it, but I just figured while we're here, we might as well talk.
I think that the number that I'm asking about is actually referenced in the, I believe is the interim decision in that docket. That docket had an interim decision that pertained to the residential renewable energy solutions program, and then a final decision that pertained to the non-residential renewable energy solutions program. So it's my recollection that the interim decision references a cost estimate provided by UI of $500,000. So that's the.
I'm sure we can take it from there, but yes,
Okay.
we can work on that late file.
Thank you. So I will withdraw Rita and Gigi and note late file exhibit 68.
Thank you. I do have more questions, which I am assuming are going to be adding to that late file exhibit, but I'll try them out maybe. On CIP 4, oh, I keep trying to add an A in there. CIP 4 on page 309.
SIP 4.
SIP 4. Is that what you guys call it? SIP? Oh.
Now we do.
On SIP 4, page 309, that does come across easier. Under project benefits, it says the company may have the option to reconcile via RAM, in parentheses, NBFMCC, once asset is in service. I was just curious about that statement, like what this document means with that statement. Is that something that should be added to the late file, or can that be spoken to today?
I'm trying to see what you're referring to. I'm sorry, you're on page 309?
Yes.
2 sentences.
Okay.
It's under project benefits, like in the middle of that page, and it's the second line on project benefits.
So here, I believe the author is trying to define the need for doing the program and whether this would be supported in rates, which is obviously a consideration for us, and really a key subject in this capital testimony. So I think they're just showing awareness of the two issues. We believe Pura wants this, and we think there's a recovery mechanism that could be supported.
Thank you. As the recovery mechanism, that's the basis of my question. I'm glancing at Mr. Hurwitz.
Yeah, okay.
That because my understanding is that this is being proposed for rate base in base distribution. I'll wait for it.
I think these elements we would add to the late file the recovery expectation of this project.
Okay. Can I add to that, Chairman? There's a reference again on the interim decision of docket 200701 on page 12 that discusses a prudence review of information technology system upgrades associated with this tariff. So if the company could just add to the late file an explanation of the company's understanding of that piece of 200701 kind of in the context of this statement on CIP 4. Does that make sense?
Yes, and the transcript will
Thank you.
respond to that.
My next question's about the municipal dashboard.
Okay, you're back in my wheelhouse.
Yep. Um, on page, my first question is about OCC 453.
Okay, I'm there.
Okay. My understanding from this response is that this company is not seeking rate-based inclusion of this project in this rate case. Is that inaccurate?
We're seeking recovery of the initial development costs. So the interfaces, the production jobs that we built to, but not the ongoing software as a service costs that were denied in 220808.
Okay. So that's what's been moved to O&M.
So that, yes. So we were granted O&M funding in the last case. For that, we transferred those costs to O&M.
Gotcha. Okay.
We do continue to, support that. We've met with each of our municipalities in the lead up to the storm season, gotten very good feedback from them about its use, what is providing value.
Okay. Sorry, just 1 second. So to the extent that that I see this project on CIAP 3, that's just the portion of the project that isn't the software as a service.
Correct.
Gotcha. Okay. Thank you. Is there and is the I'll glance over at Mr. Hurwitz again. Is there a O&M component for this? Is there 825,000 somewhere in a C schedule to show this? Is that the same number? Oh, I'm sorry. Yep.
I recall seeing the footnote that refers to this cost in one of Mr. Hurwitz's voluminous C schedules. I can take a read in and give you that.
Okay. Thank you.
Okay, so that is read in GG, please.
My next question is about SIP 4, page 614.
There.
Okay. So this page explains that the scope of work here for this project is stubbing out of 4 and 4-inch PVC ducts. Is that what that means?
So let me give you a little context on this one as well. This is a kind of a compound project. So as Superstorm Sandy approached back in 2012, at noon, I was out in Bridgeport surveying the flooding, and the floodwaters in Bridgeport, with Sandy still down off of the North Carolina coast, had the floodwaters inside the Congress substation yard and about 3/4 of the way up the stairs to the control room. That was at high tide. So high tide on that day was at noon and midnight. Was on the phone with Doug Lavotsky, the Connecticut Demis meteorologist, who was predicting the floodwaters to be at 14 feet when the storm came into Connecticut at midnight. The control room floor is at 10 feet. So as a result of that, the storm, as you know, turned into New Jersey, made a left turn. It was something a major storm has never done. It spared us. As a result, we built a flood wall around this substation. So we drove piles 45 feet into the ground, built a concrete wall, sealed it up so that the substation in this situation would not be impacted. The existing duct lines that leave the substation, again, were built in the late 60s, early 70s. They were built with a material called Blackberg, I believe. And it's a kind of a fiber composite material that blisters over time. So we have unusable ducts in certain locations here. So we took an opportunity to punch through that substation wall as it was being constructed, because doing it after the fact is going to be a significant cost. There's a compound need that there's a fuel cell going in Bridgeport that wants to use some of those ducts. So this project also has to be timed to support that need. So that compound need is what was done here to ensure that, again, for the next 100 years in Bridgeport, in that substation location, we can get out of that flood wall in a cost-effective way.
Thank you. And we asked you about that project, New Power, in OCC 473.
Right. I'm there.
And it says, the response here says that if it decides to execute the project, New Power would be responsible for 1/6 the actual cost. So what is it possible that New Power won't decide to execute the project?
I mean, that's always possible. There's costs to them. They're a public venture, I believe. So we allocated 4 of the 24 ducts, 1/6 of the ducts to New Power. So this reference is to that concept.
Okay.
So there's now, but that duct line is not just for them. This was us getting out of that wall with a duct structure that will meet UI's needs for the next 100 years, because going through that wall again would be very, very costly to customers.
Okay. And if New Power doesn't use that 1/6 of the ducts, would there be some other use?
They would be for our use in the future. And again, I mean, the cost in doing this is digging the hole. An additional 4 plastic conduits in the hole is de minimis in comparison to simply digging the hole and dealing with the environmental standards we need to deal with. There is groundwater here. The groundwater does have issues. There are soil issues here. So the digging here is costly. But our plan is to deal with that soil and that water in the right way, ensure that we meet all applicable standards.
Okay. So even though the cost to add those, is it 4 ducts allocated to New Power? Yes.
Two ducts and 2 spares, 2 cables.
So although the incremental cost is de minimis, New Power would pay 1/6 of the total project cost if they decided to use those ducts?
Well, they are using our duct line, right? So and this is a question around what the developer should share and what customers should share. If we have a 24 duct bank, it's my belief if they're occupying 1/6 of it, they should pay 1/6 of the cost.
That is also my belief. But I guess the question is, well, here's another question. In response to OCC 472, the company notes that none of the ducts in the conduit systems have energized cables, at least as of that time, correct?
As of right now.
So presently, how are those ducts serving UI customers?
They are punched out through the flood wall. So they are in the place they need to be, to serve customers in the long term.
Okay. But how is the project in service if there are no energize cables using the ducts.
That sounds much better.
I think this is back to the concept we were talking about earlier that ducts and conduit tunnels, however we want to label them, are their own retirement unit. And so according to the FERC Uniform System of Accounts, when they're stalled, ready for service, they are considered used and useful and begin to depreciate.
Okay.
Attorney Will, and this is a good example. I mean, this is our cost conscious approach as well. Right now, the conduits that are leaving Congress Street substation have water in them. That Blackberg fiber has seized the cables in those conduits. We can't pull new cables, but we don't have a need to right now. Those assets are in service and they're providing value to customers. We have done the important work of getting through that flood wall. We're close to the street. You know, in a day, we could have that conduit extended, a couple days probably, have that conduit extended to where we need to if we have a need. But we stop short of that cost until we have the need. And that need might be new power, or new power may not go forward, and we would execute that in the future.
Okay.
In this case.
But understood. This would be reactive then, like there isn't a plan, there isn't a future point where the company has a level of certainty that these ducts will be used? I mean, it sounds like it's dependent on new power and dependent on failure of the current.
The reality of that concrete wall that extends 45 feet below ground is there was one opportunity to get those ducts out in a cost-effective way. And we took that opportunity, and those ducts are now serving that purpose. And that, coupled with the accounting rule we have, is why we put them in service.
Okay. Thank you.
Attorney Wheel, we're gonna have to take our afternoon break in just a moment. Is this a good place, or do you have an?
Yes, this is a good place.
Okay. And may I ask if you have an estimate on your remaining costs? An hour more? You don't know.
I will endeavor during the break to expedite my remaining ocean of questions.
No rush. I'm just trying to.
I'm a little behind my estimate right now.
Thank you. So we're gonna break until 3:15. Excuse me, 3:10. And we'll see everybody back at 3:10.
All right, let's go back on the record. OCC?
Commissioner Arconti,
yes.
if you'll give me a moment. I believe Mr. Hurwitz was able to locate read-in GG while we were on the break.
Okay, great. Mr. Hurwitz?
Yes, the requested municipal dashboard costs are reflected on Schedule C 3.09, line 3, labeled software licensing, and a couple topical data requests include RSR 252, which states pretty much what I just said, and RSR 46, which itemizes the components of that line item. It includes more than just the municipal portal, but RSR 46 illustrates how the municipal portal fits into the total shown on that schedule.
Thanks. Was that I'm ready to, can I proceed? Okay.
Good.
Thank you. So I did, just for the authorities update, I ran this past the company. I have a significant amount of questions relating to pole attachments that are based in the capital planning exhibits and testimony, but in the interest of it being Friday and in my effort to shorten my cross, I'm going to move all those to the pole attachment panel next week. And although I do have more questions that don't pertain to capital pole attachments for today.
You're a good man, Attorney Wheel.
I'm going to go to CIP SIP 4, page 462. Are you there? Okay, I'll cut to the chase on this one. This project is labeled in several places as a transmission improvement. So I'm just curious if there is a component up here that should be in distribution rate base, or if there's an explanation for how that's broken out.
So the scope of this project for Broad Street Getaway number 2 from Pequannock Sub is a distribution project. Why the reference to transmission in that table at the top? I mean, this was a combined transmission and distribution project. The cost expended in Broad Street Getaway was to build a new duct line out of the new substation location. So I won't bore you with my Sandy Storm, but the other substation that was under the same threat was Pequannock, right down the road from Congress. They're both on the Pequannock River there. So we relocated that substation and built it much higher than the old one was. This is the getaway to get the cables from the new substation out to the north and to the west. Because on the east, you're penned in by the Pequannock River.
Okay, thank you. Just as a general kind of policy matter, when there is a combined transmission distribution project, does the company just apply its like standard transmission distribution allocator to the total project cost, or is it completely planned separately?
It's completely planned separately.
Okay, so none of the costs that are booked to plant in this case pertain to transmission. They're all just distribution.
Not for this.
Yeah, I think the key thing here, so this case only includes the distribution components of these projects. When there's a large project like this that is a substation that has both transmission and distribution components, from a project management standpoint, it's managed collectively, but the individual assets are planned within the budget and directly allocated based on their nature and use.
Just to add, I would more characterize it as directly charged to separate work orders rather than allocated, to clarify that. Generally, the allocation only applies to general property like computers and things like that where you can't physically separate them. But here, you know, the network assets, the poles, the wires, the stations, we know their main function being either transmission or distribution. And therefore, the capital construction projects have separate work orders to capture the costs directly of those.
And this document, Attorney Wheel, you know, as I look at what's written here, that the audience they're considering is our internal audience when this is written. They're describing the need for the project as a whole, and this obviously is a big transmission project. This is a 7-bus breaker and a half scheme. That's kind of the core of where the transmission system meets in Bridgeport with the generation that existed at Bridgeport Harbor, the interconnection to Singer. So this is a significant transmission project. So they're describing the need for the project as a whole as transmission improvement, but then you see as they go down to description of system need, they begin talking about the duct line. And the costs below are the duct line. So it's a smaller project inside of a bigger one.
Thank you. You go to CIP TIP 4, page 479.
I'm sorry, I'm there.
Okay. There may have been, I think I might have heard questions about this, or at least about the kind of subject I'm going to ask about this morning. So forgive me if this is duplicative, but this is this is a change order form, right?
That is correct.
Okay. And part of the reason for this change order are because of environmental remediation costs.
So this request is for an increase, both for an increase in cost, but also a shift in cost between years, so a shift in schedule.
Okay. Is the increase in cost driven by environmental remediation costs?
Yes, it says that it is.
All right. And I think I heard some testimony this morning, I think, regarding my ultimate question is why this isn't being booked as a remediation expense. But is the reason for that aligned with what I heard this morning, that these are expenses incurred in getting this project
correct
in service?
And look, this is also occurring during the time frame of COVID, right? So while much of the country was working from home, we were in the field. We had multiple vehicles. We had to figure ways of working with people that did not put them face to face, did not put them in the same room. So this time frame, 2020 through 2022, brought additional challenges in addition to the environmental issues that you encounter when you're working through Bridgeport.
Okay. I'm also looking back at the same page 479. It also says OHs and AFUDC were underestimated. Is that overheads and AFUDC?
That's correct.
And AFUDC is a allowance for funds used during construction.
Yes.
So if overhead and allowance for funds used during construction is underestimated, is that another way of just saying the initial estimate is too low?
Yes, for those elements.
Okay. So so is it normal to kind of request, like to justify a request and project expense with the explanation that just the initial request was lower than it should have been? I mean, is that a normal occurrence or a normal reason for an IP4?
So the overheads and the AFUDC will be a function of the project itself, right? So as additional elements are encountered and the project is extended, those elements will go up. So I think that's a part of that description is just an awareness of that fact that as those costs go up, the overhead and the AFUDC could increase. And as the project is extended, that can happen as well.
Okay.
I would just also add, especially with AFUDC, the project manager doesn't have much control over AFUDC, right? That's a function of how the company is financing its projects. And the formula for AFUDC, like many of our regulated formulas, is quite complicated. And you use your short-term debt proportionately to finance your QIP before you start using your long-term debt and your equity. So we estimate the AFUDC based on previous rates, but the formula result is going to vary depending on how much borrowing have you done in the short term, what is your ROE, did that change between the estimate and the actual project being incurred? So I would say, those types of estimates would be more difficult for, on the engineering side, a project manager to estimate. And so we would expect that to be a reason normally, understood that there could be a variance in the estimates there.
And I think you see in the reason for change, and this gets back to that time frame, when we were still out working and pushing these projects forward. There were supply chain issues with PVC, so we were facing the same issues others were in getting the materials we needed for our projects to keep them moving forward. So as those timeframes get pushed out, those elements, as the project stays open, can accumulate.
Okay. Thank you. I have a general question about these forms, these IP4 change forms, as they're presented in CIP4. Is this the form that like company management looks at is this like the request form that's developed by the project team and submitted for approval?
Yeah, so to generate an IP4, the business team would go into the budget management tool, so our Clarity PPM system, and enter specific project details about this. So this is an output from that. It is material that is provided to the governance committees in advance of the meetings, and it's utilized as a basis for making decisions.
Okay. So the process is digital, and what we're seeing here is like, because you can't provide the digital, what we're seeing here is like by output, is that what you mean? That this is the information that was provided digitally?
Yes, so the user, I mean, they're filling it out in an online tool, but this, as it's shown here, is what is generated and distributed for the committees.
Okay. Was this IP4 approved?
While Adam's looking that up, again, this is a substation that almost flooded. We rebuilt a new substation. This is a project to get those 12 feeders out of the substation to connect with the existing feeders. 001-765. 1765. Who's 201-765?
So on UICIP 4, page 3, it shows that this IP4 change request with ID CR 001765 was approved February 8th, 2022 by ESP, and on February 22 2022 by the IRG.
Okay, so that's when I looking at that page 3 on CIP 4. There's that column ESP/GSP decision that indicates when those groups, like those groups' response to whatever was submitted in this table.
Correct.
Okay, and similarly to the last column for IRG.
Yes.
Okay. Thank you. And moving to page 480 of the same exhibit, this is a second IP4 for the same project, is that correct?
This is an IP4 for the same project, yes.
Is it not the second one that was submitted?
It appears that it is the second.
Okay. So the reason for change here on this page says that environmental cost is higher than estimated for unforeseen obstructions and added work during construction. I'm just curious about and by the way, these questions are not pertaining to this project. They're just using this one as an example to try to understand the approval process. So when there's a $1.3 million request for increase, when this information is submitted digitally, is there a derivation for that 1.3 million that's provided? Like, is there?
I mean, there are discussions with the project team. I'd be involved in discussions with the project team about what is causing the issues. In this case, they're identifying environmental costs. So we estimate the environmental costs, but we're digging through Bridgeport. There's water, there's soil. We do test pits, but we don't do infinite test pits. So we may encounter things along the way that we're not involved in the test pits. And then there are obstructions. Again, we're doing test pits periodically, and this is another cost performance trade-off. We do a certain number of test pits to try to identify what we're going to encounter when we dig underground. In lower Bridgeport, there are many obstacles, and in some cases, we don't have records and encounter things that we have to go around. And these costs reflect those realities. Again, there's a substation here that we've made the commitment because the other one almost flooded catastrophically to put it in a new place. And we have to get from point A to point B with the feeders. We balance the estimates. You could spend infinite time to look at all your alternatives and estimate them. We try to balance that cost with estimates, but at times, and especially during this period, again, in the 21-22 timeframe, we had a number of other challenges that were contributing to these costs. Separating people, working in mass, you can't put two guys down on the manhole at the same time. How are you going to do the cable pulling? It took longer. There were challenges in this period.
Understood. Is it just to get an understanding, and I skipped a bunch of questions to kind of get to this question in the interest of time, and I can let you know where I'm pulling this from, but earlier in the document, there's what I understand to be a PowerPoint presentation, referring to page 470 of CIP 4.
Mm-hmm.
Which is it fair to say that was like the initial presentation of this project?
Those typically would be earlier in the process, yes.
Okay. So is it fair to say then, and the initial estimate in that PowerPoint was $4.6 million plus 25% or minus 10%. Is that correct?
What page do you see that number?
It's on just 470.
Yep. Okay. I see that there, yes.
Okay. And then by the last IP4, I see in this exhibit, the final approved cost was 9.125 million. Is that correct?
That's correct.
Okay. One last question about IP4s generally. Let me just pull one up as an example.
Again, just a little context on that estimate as well, right? So that's an engineering desktop estimate. Occurring back in 2000, I believe the date on this thing is 2021. So, and in general too, when we create these estimates, we are comparing what are the different alternatives. And this one is kind of a simple situation. You've got a substation and you've got to get out of that substation and get back to the location. So the amount of effort and cost you put into making those numbers perfect, there's a clear need and direction on this one. So that estimate was put together. And then when you go to do the project, I'm sure you've done a project, in your bathroom and you think it's going to take you an hour. When you really account for everything that had to happen, for the PVC delays, the material delays, the issues with COVID, the environmental things that you ran into, it is significantly more. Creating perfect estimates has a cost to customers. And we strike a balance between the effort we put in and the importance of the outcome of that. And in this case, there was really a clear need and solution to get the cables from point A to point B.
Understood. Thank you. Building a clubhouse with my kids, and I just experienced that estimate. Went to Home Depot and was like, "Dear God." Okay. Last question about IP4. Just using page 480 as an example, because I noticed this in a couple of different iterations of this similar form, where it says supporting documentation at the bottom. I noticed that many of these forms are blank like this one, and a few have what appears to be kind of a reference to as you testified, Mr. Lothman, that it appears to be like a Word document file that looked like it was attached digitally. So when we're reviewing this, if we see that supporting documentation section blank, does that mean that none was provided?
Generally, so the supporting documentation is going to show when the submitter has attached something to the specific request. There are times where there can be attachments in different portions of the system to support a request that may not populate that tag that shows there. We've modified that recently, but in 2022, I believe that could be a driver here.
But the process we're participating in here, I know sitting in this context, that might seem like a gap, but generally the people are bringing these needs live to the group. Like this is a meeting that they're participating in. This is the documentation around the meeting so people understand what's coming, but you're there to describe your need and why you have it. In general, that doesn't require a document. The person is describing it, to people that are aware of the project and right, it's your audience. And I think we then leverage these things to put them in this forum, which is a different audience.
Thank you. This is the part where I had like 2.5 hours of pull attachments questions, so I'm going to skip past all of those.
Really looking forward to that.
I had some more kind of basic concept questions about the process and how to look at these documents. So for IP3 approvals, it's my understanding, those are discussed in the testimony on page 13, but I'll just ask you to confirm or correct my understanding. Is the kind of final internal approval required for the expenditure of funds? Is that what an IP3 approval is?
An IP3 approval is what is the first financial authorization on a project. So it's what enables it to expend the full planned budget of funds.
Okay. And then as we just discussed, there can be IP4 forms that, but it's my understanding that that before the company can start spending, the company doesn't release funding for a project until IP3 approval. Is that correct?
Correct, with exceptions of either preliminary authorization, so there are requests that can be done in prior stages for partial funding authorizations. And additionally, in certain circumstances, when an IP3 is presented to the committee, if there is an immediate need, say in the instance of a customer project where there's a known need that needs to progress, we are looking at other aspects than just this project as well. So we're also taking into consideration the amount of the impact and increase in this project, but balancing that with the overall budget. And you'll see in many of instances with an IP4, we're identifying offsetting projects for any variances. So in certain circumstances, we may authorize a project to move forward that is in the approval process of IP3 until we formalize the offset for documentation purposes and ensure that that financial impact's been mitigated.
Okay. Is there, I'm trying to, sorry. If you look at page 27 of CIP 4, and these questions really are just these questions are about the format of these exhibits. They're not about the projects themselves, but is there a date on this? I wasn't able to find like dates on these formats I just wasn't sure if I was missing them.
Some of them do. It's actually something that we're looking to integrate in. So in the context of when we're reviewing this, it's at the set time period. And typically if we're going back to look at approvals, we're going into the system and looking at the, audit logs and things like that, the approval records. In order to determine the dates for all the approval documents in here, you would have to you can see towards the top, there's a field that is CR doc number. So that would indicate, so for an IP3, you have a project document, so that is a doc number. And then for an IP4, it's a change request, so it'd be a CR number. You'd have to cross-reference that with the approval log that begins on page 3 of this exhibit to determine the dates that the different associated approvals took place.
Okay. On page 251 of CIP 4, this is going back to a question I asked a second ago, but this is an example of a document that does have supporting, that seems to be referencing a Word document file for supporting documentation. Is that filed in this case, that file?
I think that's referring to this right here on page 355, right? Engineering report.
So subject to check, I believe that reference is to the document down on page 255.
Okay.
Engineering report.
Okay. And again, that was sort of just another example. I guess my question is, to the extent that I see those like forms that say supporting documentation and have a reference file, is that a file that's provided like further down the line, probably in this exhibit?
For the projects above $500,000, we tried to provide a report on the need and why we executed the project. Not tried, I mean, it's referenced in.
Yeah, and I think the key thing here being we're looking at an exhibit that has over 2,200 pages in it.
Yep.
And so there is an effort here to strike a balance in terms of the documentation that's provided here, the company's interpretation of what the various stakeholders need in order to review these additions and ensure that, they're in service and they've been prudent expenditures. But we haven't done a blanket data dump of all documents pertaining to the project, right? In certain circumstances, there could be certain project management related documents that are attached here that I would assume are probably not of interest by other parties, so.
Okay. Thank you. And again, these questions are really just about like how to interpret the document, but go ahead.
And just to your point, in trying to understand the documents, we provided you the documents we're using internally in our meeting framework. for us to understand as we're talking through these projects live with the governance board and the presenter. And then we supplemented that with a document that generally our engineering group created to give you greater context around what the project was, why we did it, and the fact that the assets are indeed used and useful. Because that was another discussion in the last case. Are they used and useful or not? So we tried to incorporate pictures of what we built so that you have the knowledge that yes, these things are in service, serving customers and providing value.
Thank you. And again, we did notice and appreciate the greater level of documentation in this case. Question about going back to page 3 of this same document. And again, this is a general question that doesn't pertain to a project, but we were talking before about the column labeled ESP/GSP decision. If it says hold in that column, is there some sort of internal document that is like, again, part of the approval process? Does that kind of create a document that provides some explanation for like why the decision to hold happened?
So in the final meeting decisions, it's the project's put on hold pending a follow-up action from the various project manager or whoever was the representative attending the meeting presenting. So the hold on these schedules is an indicator to us that it hasn't been formally approved at that time. In the system, it would just record as still pending. So it would show there as an open item for follow-up. At the time that the project team feel that they've closed the loop. So maybe it was the scenario I mentioned before, where project came forward and we identified that there's a need for some offsetting funds, and we're working to identify where that offset is. We may put it on hold and then process it later.
Okay. On page 5 of the exhibit, in the same column, there's an example of a project where the designation there is approved, reduced down to last approved. Do you know what that means?
I would need to review this specific associated change request document.
Okay. I mean, the reason for the question about the holds and that designation is just whether we have the information to be able to understand like why decisions other than approvals were made for each of these. Is that information that's somewhere in CIP 4? And I guess, yeah, I guess in particular to this designation where it seems like there was a modification or like a change was partially approved. I'm just curious if we're able to see like why that was decided.
So in response to, I believe it's RSR 37, we did provide meeting materials and the notes and minutes from the various meetings. There would be notes there that I think are comparable to what you're going to see here. There will be additional details, but also understanding the context of the meetings. These are representatives of the business that are working to execute a project. They're very eager to obtain approvals from the company so that they can advance with the work. So I think, as we're going through a number of projects and providing feedback to them, they're taking that back. They're bringing the updated documentation. So the documentation will be updated accordingly to reflect any approvals. Again, if there's an offset identified, that would then be recorded. So whatever has changed will be recorded on the approval.
Okay. Thank you.
And again, that balance, right, what we're talking here in the context of approval documents, but the other context is the real world execution of these things based on customers' timeframes and many different challenges we're facing. So there is a balance there.
Thank you. I think I have like 3 more questions before Mr. Sobolewski has a couple of more questions. And these questions are hopefully easy. I just want to compare. I noticed that there seemed to be that like IP4 and IP3 forms within CIP4 seem to have two different formats, or maybe more than two different formats. I guess the broad question is, should I be reading anything in? Is there any distinction between those formats, or is that just kind of a difference in the way that they are output?
Yeah, it's just basically a difference in the way that they're output, and we've, just updated the way that it basically generates the agendas and documentation to share with the committees. So again, as I mentioned, the information's put into the system, the manner in which we export it, and the way that the committee members like to see that information presented is just evolved over time. But you'll note that even though an IP3, while the format, layout, the colors, the text box may look a little different, overall, the content that is provided has been pretty consistent over time.
Okay. And just to put a pin in it, if I could ask you just to compare page 27 and page 54 of this document as examples. Yes. So those are both IP3 documents, and the differences are as you just described. Is that correct?
That's correct.
Okay. Thank you. That was my last question, and I'll turn it over to Mr. Sobolewski.
Good afternoon, Richard Sobolewski for the Office of Consumer Counsel. If we could turn to OCC 59. In the response to that question, the company states that there was $200 million of denied plant and service in the last rate case, plus another 86 million of rate year plan additions. Those are included in your case here today, is that correct? They're one of the big driving reasons for the amount of rate increase asked here.
That and surviving in the future as we strive to meet customer needs and maintain a functional business, yes.
Yeah. And those are all in service.
When you say define those
identified in OCC 59, that 200 plus the 86, those are all in service now.
Yes.
Okay. We could turn to OCC 60, which is similar, but I want to spend some time on the vehicles, the attachment. There's a vehicle list here. And my understanding is that these are some of the vehicles that weren't replaced after the last rate case. Is that correct?
Those are vehicles that are eligible for replacement.
Okay. Are those all proposed to be replaced as a result of this proceeding?
No, the combination of the lack of funding in the last rate case and the delays in COVID in getting vehicles have put us behind. So we have a plan over a number of years to try to restore back to an optimal level of new vehicles and maintenance. But so in the 1-year rate plan, that's the beginning of the path back to that optimal level.
Okay. Do you have specific guidelines or thresholds for which vehicles get replaced? Because looking at this list, there seems to be a wide range of like light trucks to heavier trucks like dump trucks and the like, flatbeds and what have you. Like for mileage or age.
And Mr. Sobolewski, we'll just bring up Mr. Pereira, who co-sponsored this response and has been sworn in.
Good afternoon.
Good afternoon.
Thanks for your question. We have a general guidelines around replacement for vehicles. So light duty vehicles, 7 years, 125,000 miles. For heavy duty vehicles, those would be our bucket trucks, or they'd be 10 years and 150,000 miles. So these vehicles fall under that, those general guidelines. The one caution is that for some of our heavier vehicles, they may look aged, but the mileage might not reflect the amount of use that they have. Because as you can imagine, as we're operating the fleet, as we're repairing the grid or performing our work, those vehicles tend to idle often. So they're not moving, but they're idling in order to move the boom, in order to provide conditioned space for our employees.
So based on those guidelines, especially for some of the lighter trucks,
yeah,
some of them that are an SUV or a pickup truck or a van, maybe. If I see the ones that are 7, 8 years old with 50,000 miles on it or so, those would be less likely to be replaced now. Is that fair assessment?
Absolutely. If we were to prioritize, those would be the ones that we could possibly hold on to longer. Now, it depends on the model. One of the things that happens is as you operate a fleet over time, you can identify some vehicles that are terrific workhorses and some of them that can be problematic, like the Dodge ProMaster, or, which is problematic, or the, GMC Canyon, that's just a good vehicle.
So based on those comments, do you like shift what your strategy is, or
a little bit?
You buy the vehicle you've had a better track record with, if you could.
And we also reach out to our peers in the industry to see what they're using, how they're operating, what type of vehicles. I think that particularly applies to as we consider, sustainability. What are the new vehicles that are coming out that seem to be more reliable? So yeah, we do that. In addition to our own experience.
When you decide to purchase new vehicles, do you trade these in?
Not quite. When we trade them in, there's not really much to trade in.
Okay.
What we do is we auction them off.
Okay. And those proceeds go into either effectively reduce the cost of the new vehicle, reduce what you have recorded on your books.
Yeah. So vehicles are individual assets. So when we dispose of them, there's a gain or a loss. And if you dispose it without any proceeds, it's fully depreciated, be zero. Would these have exceeded their age? That's what you'd expect. If they go to auction, which I think is generally what happens, they're at these big, wholesale auctions, we would record that as a gain on disposal of utility asset, and it would be in the revenue requirement. It's generally fairly immaterial, as you say, but it is included in the accounts on the income statement.
Compared to other fleet operators, we're actually very conservative. We hold on to our vehicles much longer than most fleet operators do. Typically, we will see other fleet operators holding their vehicles on for 5 years for light duty vehicles, as an example. And we hold on to ours for 7.
The light vehicles, are they assigned to a particular staff person, or are they a pool type of asset?
They're a pool type asset. I mean, in general, there might be a predominant user, but our employees move around generally. I want to ensure we understand the critical nature of this asset, right? So as we face these challenges with our capital, these vehicles, none of the work we do is in the building, right? We need vehicles to get to everything that we do. So this is directly in the critical path of our serving customers on a blue sky day, even more so in a significant weather event. And the age of the fleet, if called upon in a major weather event, could be an issue and will be an issue if this situation isn't rectified.
I don't know if you filed in this case or not. Your list of vehicle purchases over some period of time?
I mean, the dollar value of the capital fleet is in the record in in this case, you've asked for the capital looking backwards, many years.
But they'd be in the plan additions or CapEx?
Yes.
Okay.
I just have a couple of quick follow-ups on that, and I promise we're done. There was a mention of the fleet replacement plan. I see that in CIP 5. And I'm curious if it would be possible, I guess I'll back up a little bit. CIP 5 presents plant, the original CIP 5 presents plant in kind of 3 chunks from August to December 2024, then it looks like calendar year 25, and then January through October 2026. So it's hard for me to see from here like what the rate year incremental plant value is. Do you know offhand what the rate year, like the proposed increase to plant as a for this fleet replacement is?
Just like to confirm with my colleagues.
Can you clarify what you mean by incremental plant?
Well, yeah, I think I'm trying to distinguish, I think, between like the company's distinction between like the plant that's in service as of the end of this, up until the beginning of the rate year versus the plant that the company expects to enter service after the beginning of the rate year. So I'm asking about that second classification.
Right.
So basically the vehicles that would show up between November of 25 and November of 26, that value.
Yes. So yeah, the nature of my question is exactly that, Mr. Eves. The CIP 5 starts in January, which is a couple months into the rate year. So what I'm looking for more precisely is the plant between November of 2025 and October of 2026 for this line item.
So for this project and for all the projects in UI CIP 5, they're reflected in, I already forgot. UI RRP 3 tab 4.1. So you'll be able to see the monthly additions associated with the projects and identify the additions in any slice of time periods.
Okay. Would it be possible, and this is kind of half a planning question and half a capacity question, would it be possible to provide something in the same format as OCC 60 attachment 1 that shows the current fleet that is planned to be replaced by those plant additions in the rate year?
So
Mondo says yes.
Well, I was just going to highlight the fact that I know, so UI CIP 4 has been the YouTube darling of the afternoon, but in UI CIP 6, page 848, there is a listing by calendar year of the vehicles that were included in the plan to be purchased.
Okay, my question was more about what's being replaced. Is that also in there? Because the exhibit Mr. Sobolewski was just asking about, as I understand it, is the current fleet that's eligible for replacement.
All of the vehicles in here, so this is the UI fleet vehicle replacement plan. These are for replacement vehicles.
Okay, so CIP 6 shows the vehicles that are being replaced, not the vehicles that are being purchased. What I want to know is, we discussed a second ago with Mr. Sobolewski that the group of vehicles that Mr. Sobolewski was asking about are all the vehicles that are currently eligible for replacement, but the plan isn't to replace all of those vehicles in the rate year. What I would like to know is there somewhere we can see the subset of that exhibit that is planned to be replaced in the rate year?
We can provide a list based on our current planning.
Okay. Could I ask for that as a late file?
Yeah, so this will be late file number 69 I have. So subset of exhibit, what?
OCC 60 attachment 1.
OCC 60. And just say that again, Attorney Wheel, it's the number of replacements.
It's a subset of that exhibit that is planned to be replaced in the rate year.
Okay, thank you.
And that finally is OCC's last question for this panel. Thank you.
Okay. Thank you, Attorney Wheel. Before you depart, just want to jump to page 18 on the agenda on poll attachments. We have for your time on cross there for an hour. Just want to see if you wanted to update that.
That also be on a Friday.
I'm gonna say I would update that to 3 hours, okay. but I am saying that hoping that I'm overestimating.
Okay, I'll make a note. Thanks.
Hopefully I can make a context statement in the beginning and eliminate some of that. We'll see.
Okay. NECTA? Attorney General? Office? Deep? Thank you. EOE? Thank you very much. I do, Commissioner Karen.
One quick question. Eves, you were talking earlier concerning the problem you had in I think it was Bridgeport, no, North Haven, with the industrial area and the telecommunications lines. And the question I have is, it wasn't clear to me that there will still be poles remaining after you go underground with the telecommunications lines, or will they be undergrounded as well?
No. So they're express aerial cable feeders that run on the pole line, and you're familiar with that, correct, Commissioner? So there were multiple 4 aerial cables. Those are what got underground. But the overhead line that serves all the loads, the streetlights, all those things remains. And the telecom companies did not see the need for their resiliency to incur the cost of undergrounding, so they remain on the pole line. The 4 feeders, though, now are protected from a major weather event along that path.
But so the project ultimately is to get not the feeders, but the rest of the lines underground. Or did I
the 4 aerial cables underground. The overhead line will remain.
Overhead line will remain. It's not slated to go underground at any point. Okay. All right. Very good.
Because of again, the cost of that is significantly greater than simply running the express feeders through there.
Okay. Got it. That's it. Thanks.
Thank you, Commissioner Karen. I have a couple questions. So just want to go back to RSR 285 attachment 1.
We're there.
Okay. So you testified earlier that there were some costs related to transmission that are included in RSR 285 attachment 1. Am I understanding that correctly?
Yes.
Okay, thank you. So there's no indication in that attachment that includes both distribution and transmission. Is that right?
I think it's just in the interpretation of what the question was, because the question started with the total overhead pools, which are common between transmission and distribution, and then how much of those got capitalized. So our interpretation was that it was start with the overheads and tell us of those how much were capitalized. We didn't intend to mislead, but interpreted the question as wanting, what portion of your pools are capitalized all in, not just from a distribution perspective.
Okay. And are there any other interrogatory responses in this proceeding that also have transmission data?
speaking with my colleagues, we have submitted our financial statements, our FERC forms. Those are all combining transmission and distribution. We've tried to be very clear, differentiating the two, but there are some reporting, especially external reporting, that does contain both. Our additions information and all of that has been separated and just includes distribution or general property. And I think there can sometimes be confusion with general property too, because it's a class of its own, but from a rate making perspective, it gets allocated between transmission and distribution. So we tried to be very clear about that in those instances. I don't know if there's any other examples.
The S7 has a company total and a distribution component. So there are transmission costs that are reported in the standard filing requirements as well.
Okay, so are there any other interrogatories that don't label costs that are allocated to transmission?
There were 2,000 multi-part interrogatories, so sitting here, I'm not aware of one. But
certainly we made every best attempt in the intention to clearly label the responses.
Okay, I appreciate that answer. Do just want to go, not really a question, I just kind of want to make an addition to late file exhibit 68, just that tack on a little bit. I'll give you a second to get there. So I would just like to
68
Yeah.
requested by the OCC, or 61 as requested relating to
68.
285. Okay, great.
Yeah. So can the company also indicate whether it sought recovery for costs related to the NRES, RRES IT project and any RAM proceeding? And if so, explain how those costs differ from those included in plant and service in the company's rate application. Okay.
Absolutely.
Okay. Attorney Vaughn, do you have any redirect, or would you like
if we could take 5 minutes, I
yeah.
think we may have just brief
Yep.
redirect, but I
Sure thing.
appreciate a little latitude.
Yep.
Just,
Let's
thank you
do
so much.
a 5-minute recess. Thanks. Okay, before we go back on the record, just want to say I'm happy security received my memo regarding Mr. Eves. All right, now we'll go back on the record, Mr. Vaughn, Attorney Vaughn.
Thank you, Commissioner Arconti. We just have a few quick questions. Mr. Burge, earlier today, you received questions from Purist staff and from Commissioner Arconti regarding overheads. Do you recall that?
I do.
And can you provide additional information on what is in the record with respect to those overheads?
Yes. So the overheads appear in the project costs in many different places in the record and in the plant additions that were provided by work order. So in the engineering audit, we provided all the continuing property records at the work order level and supporting the actual plant additions between September 1st, 2022 and December 31st, 2024. And that information would have included the overheads. We also provided all of our policies, manuals, and internal guidelines regarding how the overhead programs work. And in instances where specific questions were asked to break out costs, such as OCC 373, the overheads were specifically delineated from the other project costs at the project level to show them there. And we will, in the late file 61, include the other references to the record in which we provided the overhead information.
Thank you very much. Mr. Eves, do you recall cross-examination from OCC regarding the project documentation submitted by the company in this proceeding?
I do.
And could you provide any additional comments on what the company sought to provide?
So in the last case, we provided the standard filing requirements, and the outcome of that case and the feedback we got was that we hadn't met the burden with the documentation we provided. So in the absence of guidance, we prepared the documentation that we submitted in this case, which is thousands of pages of our project documents. And we had some discourse around the OCC's ability to understand those documents. So I think we would appreciate some feedback from those documents to prepare something that we could all understand and would have a format that would be sufficient in this process and tell our story at the right level of detail for it to be understood here.
Thank you. And my last question to you, Mr. Eves, is do you recall throughout the morning and afternoon you received cross-examination from Pure staff, OCC, and others regarding various projects and programs put forward in the company's capital case?
I do.
And do you have any additional comments on the company's need for capital and its impact on customers?
So through the course of the day, we were at kind of a low level of detail, kind of in the trees, not looking back at the forest. And I just wanted to take a moment at the end here to discuss the forest. With the outcome of 220808, we're operating with a 50% capital budget right now to limit the financial impact to our company. You don't really feel it at this point because there's a lot of inertia behind our system. The reliability and the performance of our system is based upon what you've done a decade ago or more. But we are building a bow wave of need into the future. And if this continues, that will have direct impact on customers. I believe the record demonstrates that what we have been doing has been working. When you look at our reliability performance over the years, when you look at the storm costs that we're asking to recover, where the utilities around us are seeking hundreds of millions of dollars, sometimes more. Our request in the last case was on the order of 25 million. Our request in this case, before we incorporate the need from the tornado we had, was a negative number in the major storm criteria. So our customers don't see the outages that other utilities see, and they have gotten the benefit of it over the long term. The absence of that, allowing the system to degrade, maintaining the path that we're on, will have significant impact to customers. And the longer it goes on, the bigger the hole to dig out of is going to be.
Thank you very much, Mr. Reeves. That concludes our redirect.
Thank you. I believe that concludes our hearings for the week. Attorney Vaughn, unless you have any of the read-ins, maybe I can just do an administrative check to make sure we're on the same page heading into the weekend.
I don't believe we have any of the outstanding read-ins, with the exception of the one that Mr. Hurwitz read in earlier this afternoon. I think it was GG.
GG. Okay. Thank you. Thank you. Okay. Very good. Then to compare notes, I have 8 open read-ins: N, P, Q, U, V, X, AA, and BB.
Yes, I think so.
Thank you. And it looks like we are up through, we have 69 late file exhibits recorded so far. We will endeavor to go ahead and get a week's worth of those uploaded into Lotus either today or Monday. But I will note that the deadline is not until May 14th for all of them. So we'll work on that. Are there any administrative matters from the company or any other party before we adjourn for Monday morning?
No, none from the company.
Thank you. All right, seeing none, we will adjourn and reconvene Monday at 10 a.m. with the environmental remediation panel. Thank you.